Hi everyone, at last, here we are. I'm so sorry about the delay. It's a problem with Google. We use Google's technology. And, you know, despite being one of the great big companies, it's not always the case that it's one of the best. Let me know that you can hear me. I've got so much quality information. My apologies again. It's taken a little while to get started. I really am sorry about that. Everything's up and running now. I don't even know what we did, which was right, but it worked, okay? So like I said, really sorry, but I'm going to make it up to you. I'm going to make it up to all of you, because it's going to be the best webinar I ever give. And it's no false boast. I'm really going to make sure it's the best I ever give, for the simple reason that I kept you hanging on for so long. Okay, so once again, apologies for that. Just making sure it's all up there. And we've got some great live trades to show you as well on this. Okay, if you see me looking and like a headless chicken, it's because we've got some great trades that I want to show all of you good people as well at the other end. So we're going to make sure that I give you, over the next 2 hours, I'm going to give you all the best information that I can possibly garner from my 10 years as a hedge fund manager, from my 18 odd books, which made me a global authority on online trading. Don't buy the books. I'm going to give you the information in this webinar, the best bits, all the way from this, which is 20 years old. Financial Times are my publishers. There's my name, Alpesh Patel. I'm going to give you all the best bits from there. Things like this. This is what made me the global authority on online trading. Obviously not the global authority on giving webinars when you consider that we had that little delay. So like I said, apologies on that. Okay, if the screen's a bit blurred, refresh it. It takes about 30 seconds to settle down. If it's still blurry, it's because the internet's slow, and I'll make sure we speed things up. If I'm talking a bit fast, I apologize. I'm trying to make up for lost time because of that little problem. Okay, big fat books. All the best bits from those 18 books, all the best bits from my 200 Financial Times columns. You might have seen them. They look a bit like that. Is a little printout that I created for it. FT Money, that's me when I looked a lot younger. So I'm going to give you the best bits of knowledge from there. 10 years as a hedge fund manager as well, and from 3 years of my shows on Bloomberg, which compresses all the best bits. Okay, so you're going to get all of that. You're also going to get, every single one of you, an email with 2 full-blown trading ebooks just for being on this webinar, me saying thank you to you. So let's get on with what I'm going to talk about in all of this. Okay, and let me show you what I am going to talk about. Let's get it on. Here we go. Brilliant. Right, screen. I'm going to put this on full screen. So you're about to see some slides, some amazing slides that I'd created. Okay, you should be able to see those on screen now. There we go. All right. Like I said, because of that blasted hitch right at the start, off a tiny bit, but we're back to it. We're back to it. We're back to normal. Right now, what I'm going to talk to you about is 3 major things. The best technology with which to trade to give yourself the edge, but making sure as much as possible that technology is free wherever we can. I'm talking about free, live, real-time prices and data. Why do we want it to be free? Because anything you pay for comes out of your trading profits, and we want to be making sure we keep as much money in our pockets as possible and pay for as little as possible. So that's the first thing, the best trading technology out there in the world right now. The next thing I'm going to talk about is a business plan, so you know how much you can make, how much you should be looking to make. And the third and final thing I'm going to talk about in this webinar is my trading strategy, one of my 10 that I use in the hedge fund, which you as private investors can use as well. Now, let's be absolutely clear. Okay, as well as being a hedge fund manager, I've been talking to members of the public, private investors such as you for the last 20 odd years. That's why, you know, all those books, the Financial Times columns, I've been talking to members of the public well before I set up the hedge fund. The hedge fund's only been around for 10 years out of here in the UK. Out of our offices are in London, and the funds themselves are domiciled offshore, and I'll explain why we do that. But we're a British company, I'm proud to say. Now, some of you are going to be listening to this webinar from Australia, New Zealand, the United States. It's for a global audience. I'm going to also tell you what, after Trump, I think are the best things to invest in, what I think are the best products, where you're going to make the most money. All right, this webinar, make no mistake, is about making money. All right, for no other reason than simply this. Okay, why would anybody else be here? All right, we're here because we're interested in making money. Got it? It's as simple as that. All right. And like I said, you should all be able to see on screen. And I want to make sure that you can indeed all see on screen. You should all be able to see on screen the first slide, trading tech from number 10 to the world. Now, why do I talk about technology? See, most people know me from the hedge fund industry, and they know about my trading strategies. They know about the competitions I've won and all the rest of it. What most people don't know is actually, like most hedge funds, we create a hell of a lot of technology. And we use that technology, to then give ourselves an edge. And I'm going to show you how you as private investors can get an edge. Now, who are you? Who are you in the audience? Let me tell you, 80% of you are beginners who want to trade with about $1,000. So I'm going to show you how and what kind of returns you should be expecting, how to open an account with brokers with as little as $1,000. So you're only risking 7 cents or 7 pence per point or per pip. Okay, we're not just going to talk about spread betting. It could be CFDs, it could be anything. All right, so I'm going to make sure we trade the smallest amounts to gain the biggest skills. And let me just tell you why I showed you and why the focus is on tech. All right, as you can see, that's me standing up there. All right, there we are. I look like a dormant. It's because I'm hosting this part of that conference. So last week I was in India with the Prime Minister. You can see her there, and the Indian Prime Minister's there, obviously. And I was hosting, after they were off stage, hosting this next part of the technology summit. Like I said, most people don't realize that when you're in the hedge fund industry, you're actually in the technology industry. Because how do you think we get an edge? It's not just because we think, oh, I think that's going to go up, that's going to go down, buy this, sell that. It's because we use cutting edge technology to do so. So whilst most of you might know me just from the BBC and the paper reviews and the 300 million odd viewers we have, in actual fact, I'm better known for tech and working with government in tech, and that's my government related work, a government related hat on tech. And you can see me with all my team out there. All right, so I wanted to give you that bit of a context to all of this before I tell you business plans for trading, profitability, and strategies. The reason it's important for you to know this is that you understand that trading has moved on. Trading, as you'll see from this recent headline in the Financial Times, has moved on to technology. And the great news is private investors have access to this. They have access to this technology, most of it for free. Okay, and that's good news for us. It's what gives us the edge. In fact, it's this technology and the technological developments which have happened in trading which has differentiated new from old trading. What do I mean by that? Let me tell you how people used to trade. Okay, the old way. And I'm going to explain the new ways. Now, some of this text may appear a bit blurry, a bit small on your screens. I apologize. It's just the nature of the internet and this kind of technology. But what I will absolutely make sure, regardless of all of that, is that I read it all out to you, and so you're all going to be able to see it. So don't worry on that front. I will make sure it's all visible and all amply viewable. Okay, so what are the old ways? Well, the old ways before the technologies I'm going to show you in this webinar, people used to be screen slaves. They felt they absolutely all the time had to be in front of the screen. Okay, that's what used to happen. They felt they had to be in front of the screen all the time for the various obvious reason that how else were they going to get opportunities? They thought the more they're in front of the screens, the better it is. In actual fact, with technology nowadays, that just isn't the case. It isn't the case. What happens now, in actual fact, as I'm going to show you with some live trades, is that you don't need to be in the front of the screen at all. What you can do, and I'm going to give you some numbers to write down in this webinar, and I want you to grab a pen and paper. Okay, and if I sound a bit excited about today and all of this, it's because you're going to see why with some of the recent trades we have been, and even more importantly, how I'm going to get you to make the same kinds of returns. All right, the same kinds of returns. That is my goal. For all my bragging about, you know, Financial Times columnist and 18 books published by the FT and all the rest of it, surely my own TV show where I'm paid by Bloomberg TV, surely, and hedge fund manager, surely with all that bragging, all right, I should be able to get you into the top 10% of private investors who make money. Only 10% of private investors do. Surely with me training you, giving you in the next 2 hours the best insights into what professionals do, which private investors can copy, private investors with as little as $1,000 can copy, surely I should be able to get you in that 10%. All right, that is my goal, that 10% of consistent profitability. I don't mean every trade will be winning. What I mean is, even if we're right only 50% of the time, the 50% we're right will make us far more money than the 50% we're wrong. So we'll have stress-free trading because we know we don't have the pressure of trying to be right every time. We know that if we get a winning streak and we're right 7 times out of 10, then we'll make bumper profits. And if we're wrong because we get a losing streak and we're wrong 7 times out of 10, then we won't lose too much because we're at break even if we're just 50-50 right and wrong. Got it? We're already profitable if we're right 50% of the time. I'll explain all of these numbers to you in this webinar. That's why I say grab a pen and paper. There's lots to come, maybe even a camera phone so you can take pictures of some of these slides, my friends, okay? Now, I'm going to show you how in this webinar you don't need to be screensavers. It was the old way of doing it. In the old way, you only had a few opportunities each day or each week. That's why you had to look at the screen all the time because you didn't get too many opportunities. Right now, thanks to the power of technology, we get lots of opportunities. Instead, what we do is we pick the one quality opportunity. So write this number down, 1. We're going to trade 1 quality trade a day. All right. I'm going to show you how by scanning your computers. You don't need to be a screen slave, but by scanning your computer screen, you only need to watch the screen for 15 minutes, or write down the number 15 before and after work, or any time during the day for 15 minutes, okay? 30 minutes in total. So 15 minutes before work, 15 minutes after, or whenever you find those 2 pockets of 15 minutes, right? And you'll pick 1 trade. You're going to observe, however, 12, and write down that, 12 different instruments, 12 different opportunities, but only pick 1. And because it's 1 trade a day, 1 quality trade a day, that's 20 a month. Now you might say, Alpesh, can I do more? Can I do less? Yeah, of course you can. But I'm going to show you how on a business plan, your returns are optimal, they're best, they're most efficient, best return on time invested, most money you can make with these numbers. And you're going to see it practically. Because as a professional fund manager, my job is to make sure my team are efficient and I can teach you the same way. And by the way, when we get new trainees in my fund, guess what? All of those people, they start off with just $1,000 in their account because it's my bloody money. I don't want them blowing their nuts on it. $1,000 in their account, and then we show them how to generate a decent return off the back of it. The old way was you had to watch lots of computer screens. You'll still see those old adverts, you know, where they show some Muppet in front of 6 screens or 3 screens or 8 screens because it looks really authoritative. That's the old way. Now what you'll do is you'll scan just 1 screen on your laptop or your PC. It might have lots of little windows or panels open showing different opportunities, but you'll pick 1 opportunity. That's how I'm going to show you in this webinar, all right, how to do it. In the old days, you focused on either stocks or gold or oil or an index because you couldn't be a master of all trades. The new way of trading is this. You look at anything which will make you money. If it makes you money, you look at it, okay? The old way was you had to pay for signals each day, each week, each month, each quarter. People would charge you just to show you their computer screens and all the rest of it. The new way of trading has moved on. You don't make any such payments, all right? The old way, you paid for software data feeds. The new way's moved on. You don't make any of those payments. I'm going to show you how we get live real-time data for free for life. Okay, just like I'd commentate in my Financial Times columns. My job was, a bit like that money-saving expert guy, is to show you how little tips and tricks out there. I was like a consumer expert for private investors. I'll say it again, consumer expert for private investors. I know I bloody had hair back then, yeah? But my point is, I'm going to give you the best bits, the best tips out of those columns accordingly. Sorry that I keep banging on about those bits, because it's important you establish credentials. There's a lot of Muppets out there who've worked in an IT department or at Thomas Cook and now claim to be trading gurus. All right, unless you run a hedge fund, unless you've got paid by Financial Times and Bloomberg and you got those credentials, seriously, would you learn to drive from somebody who's never actually driven a bloody car but just sits in the passenger seat and tells you what to do? Would you go to a doctor who's not qualified? It's like getting a backstreet abortion. Well, this is your money. Don't do it, okay? Unless the person's got big credentials. That's why I'm banging on about mine. The old days, people used to do binary options trades. Then they quickly realized that there's a lot of dodgy brokers out there, so they avoid getting ripped off by them. So I'm going to go through in this webinar the dodgy brokers, the dodgy tricks they use, and how you can spot it. And I'll let you into a little snippet. If they're regulated in Cyprus, stay away. If they offer binary options trading, stay away. All right, but I'll go into more detail in this webinar and which brokers I like and so on. The old way was you bet around big trading events. Somebody will say, oh yes, the FOMC comes out at 12 o'clock with some economic data, or the Bank of England minutes. Yawn, crap. We don't ever gamble on news. And I'm going to show that to you in this webinar. I'm not going to be gambling around news events. That's gambling. That's trying to pick the 3:30 at Kempton Park. Okay, we're not here to gamble. We are here to play probabilities and make money. And the best way to make money is to make sure we're not gambling around news. So I'm going to show you that. Oh, by the way, I've got a master's degree in economics from Oxford University. So don't think, oh, he's only saying that because he doesn't understand the economics. I understand the economics. And as my tutor at Oxford, Terry O'Shaughnessy, said, fellow in economics at St. Anne's College, he said to me, you know, you don't learn economics if you want to trade, because he knew I wanted to be a trader all along. And I said, yeah, I know, Terry. So, you know, all that news stuff, bullshit. The way we make money and what news and macroeconomics is two different things. And we're not going to be doing the whole macroeconomic stuff and reading the FT and the Economist and trying to appear very knowledgeable. You can do that for fun if you wish. But you're not going to do it to try and make money. Try and make money. I'll show you how we do it. Also, the old way was you learned charting and the MACD and the stochastic and everything else. And I'll show you the trading screen I'm gonna take you through in this webinar. Okay, you know, all this live data, live real time, and to prove to people it's live, real time, and free. Because people used to say, "Oh, that's your personal account. Therefore, no wonder they give it to you for free, Alpesh," because they would, wouldn't they? No, actually, look, anybody can open it. That's a demo account even, and it can be opened now for free. Demo, okay, live real time data for free. I'll show you how to download all of this. Okay, but that's not the point. The point is this. The point is this. We're not going to be sitting there drawing little lines and little charts on all of this stuff. Okay, we're not going to be doing any of that. What we're going to be doing, I'm going to show you, by the way, my favorite currency pair and how we trade it in just 1 second. But I just wanted to show you this one for this reason. New Zealand dollar. Those who watched my webinar earlier in the day will have known that I've been in love with this currency pair and I've been banging on about it for ages. But anyway, you can see why. My point is this, okay, that we're not going to draw these little trend lines and Fibonacci's and Elliott waves and MACDs and all the rest of it and say, oh, yes, well, it's doing this, it's doing that, and therefore this. We're not going to do any of that because it's too time consuming. Like I said, you know what's happened? Technology has moved on. Robots will do it for us. They'll tell us through little arrows like this when the market's going to collapse, when it's going to go up, and I'll explain all of that to you and how you can as private investors as well. This is incredibly important because if you don't do this, you're going to get left behind. You're going to think that you're in 2016 when actually you're going to be trading like somebody in 1916, and of course you're going to lose money. All right, so that's why I'm going to have this focus, and I talk about technology and more importantly how it's accessible to regular private investors. Okay, so we're not going to be doing that. We have the computer automation to do it for us. Also, the old way was you basically got the same return on your time as £10 per hour in the old way. As I've written in my Financial Times columns, and I found the actual column which I've written this in. Like I said, I had some of these reproduced and published. Let me just show you. So when I tell people that I've written about this, I'm going to share that with you. So that was one of them I'd written on. Day trading, let's just forget about it. Now, don't get worried. Don't think, oh, he's not going to tell us how to make lots of money in a short space of time. I will, but this way isn't going to be it, and I'll explain why. As I said in the FT, you spend too much time in front of the screen. All that's going to happen, my friends, is the amount of money you're going to make divided by the number of hours means you're going to probably earn as much as the guy in McDonald's. So what we do now, the modern way of trading, is you get returns from a business plan, and I'll show you, over 100% per annum. Now you might think, bullshit. How do you get over 100% per annum? How come hedge funds don't do that? Hedge funds don't do that. My hedge fund doesn't get over 100% return per annum. I wish it did. Any hedge fund that doesn't last for very long. But private investors do. So how come private investors can do better than fund managers? Huh? Okay, let me explain. As a hedge fund manager, I have got, let me show you my face again, okay? Not to put you off your dinner or whatever, but for this reason. And I hope you've all grabbed that pen and paper and turned the TV off and told your family to leave you alone, because this is about making money. So concentrate for the next couple of hours for that reason, next 1.5 hours. It is this. As a hedge fund, I've got £15,000 rent for the 4 or 5 staff we have in London. Plus, we've got rent of offices in Luxembourg and in Singapore. Okay, so that comes out. We've got lawyers, accountants, auditors, custodians, administrators to pay in the UK and where our fund is domiciled. All right, that's a lot of expenditures. You as private investors don't have any of those. So you might say, well, wait a minute, that still doesn't explain how we're going to get over 100%. I'm not going to tell you you're going to get over 100% return per annum or what you should be targeting. And not every year will that happen. Some years will be better, some will be worse. I'm not going to do it. I'm going to let my mentor explain. My mentor was Bill Lipschutz, who was in this book, okay, who was global head of foreign exchange at Salomon Brothers. Don't buy the book. It's 20 years old. I'm not plugging the book. By the way, as an author, a £25 book, you only get £1 in royalties. I'm definitely not plugging the bloody book. Okay, I don't need an extra pound. Thank you very much. Bill Lipschutz, global head of foreign exchange at Salomon Brothers, whose boss was Warren Buffett, took me through the business plan. Okay, and I'm going to take you through the same business plan in this webinar so you can see how much return you should be making and why. See, as private investors, you don't have any of those expenditures. You have freedom to trade when and where you want. We don't. As a fund, if I said, oh, I'm only going to do one trade a day, my investors would say, oh, well, we're overpaying you. Okay, and it's exactly what Bill said. He said, we had to trade a bit more than that. We have more constraints. All right. So you might say, well, why doesn't everybody just be a private investor? That's because I can't get 100 million euros as a private investor. I can as a fund because I've got that infrastructure. Okay, so as a fund, you've got a choice. Either get lots of money and a lower return or be a private investor with a big return but less money. Do you see how it all works? Okay, so I wanted you to all understand that at the very least. Now let's go back to some of these things. The old way of doing it was you followed all these failed self-taught teachers. Well, I want to shake up the market. I've been watching these self-taught teachers who used to work at Thomas Cook or used to be athletes and all the rest of it, and they set up things and they stick the name Institute, Academy, University, College or School, and they think that's it. So I got a bit pissed off and said, you know what? I'm going to enter this market. I'm going to provide technology to people, which I think is as good as Google is for search engines. I think my technology is as good as that in picking the winners and losers, when to buy and when to sell, and therefore should be a billion-dollar business. So I thought, you know what, hedge fund, I'm going to go in and give that industry a kicking. So the new way you do it is you follow bloody hedge fund managers. You don't follow freaking self-taught teachers. Like I say, watch to the end. You're all going to get 2 ebooks on trading, full-blown books on trading. Okay, you're going to get that. Let me tell you a bit more. The worst things you can do when it comes to trading is try and guess the news, like I said, the Trump election or whatever else, and you're going to see proof of that in a second. You're going to see how, nevertheless, we get it right and how we make money. Next worst thing you can try and do is be in front of the screen all the time, like I said. The other thing is not have a plan B. The worst thing you can do in life at the moment is not have a plan B of a second income. Okay, trading was supposed to be my plan B. 20 years ago, I was in your position. I was deciding what to do with the rest of my life. And therefore, I was trying to work out, what am I going to do? And trading was going to be my side income. It was going to be something which will help top up the pension or the mortgage or pay down rent or whatever, pay off credit card bills when I was a student. In the end, it became my plan A because it gave me the 3 things which are the reason why anybody does anything in life at all, ever. And those 3 things, in case you don't know, they're the 3 F's of life. You either do anything in life for fun, for funds or money, or for fulfillment. Trading gives you all of those. Trading's not going to be very fulfilling, though, unless you're not a screen slave. That's why I say to people, I'm going to make sure you're not left as a flipping screen slave. Because what's the point of having you as a screen slave? You'll just turn around to me and say, oh yeah, thanks, mate. You just turned me sitting in front of a screen all day long. I don't want to do that. Okay, so we're going to have a plan B, but we're going to have a blooming plan B that actually works. Got it? A plan B that actually works for us and not one which leads us in the same old position as before. And let me tell you something else about all of you in this webinar. You all want to make 500 to 1,000 a month. Okay, the reason I tell you that is it's a small hurdle to overcome. Small hurdles are achievable. If I give a small ambition for us to achieve in this webinar, like I'm going to teach you how to make 500 to 1,000 a month, those skills in trading, because trading is a scalable business, those skills in trading will then allow us, those self-same skills, 500, you can make 1,000. If you can make 1,000, you can make 2,000. If you can make 2, you can make 4,000. Do you see why I want a small hurdle for us to overcome? I want us to get rich slowly, not get rich fast, because that's bullshit. I want us to get rich slowly. And the reason we're going to get rich slowly is because then you won't be disheartened should you have any little hiccups along the way of learning, and you can start small so you won't ever have big losses, and then you just add a bit of money, get a bit of money, get a bit of return, and can keep on going. Okay, otherwise you'll give up if it's too large a task. If I say to you on day 1, oh, you're going to climb Mount Everest, you're going to give up. All right, so that's how we're going to do it. And it's how we do it in my firm with new staff. We start them off small so that they can actually do it. Okay, there we go. And the other thing is we try to get rich, like I said, slowly, because it's less stressful. It is less stressful, okay, for that simple reason. Now, what we're seeing in the industry at the moment, like I told you, is all these institutes, schools, colleges, university. Anybody who says that, leave it. We live in an age, right, where everybody says, oh, if you're an expert, ignore them, right? Instead, follow any muppet who just gives himself, like Trump, follow anybody who gives his name a university at the end. Trump University is being sued for being fake. And it's the same problem in trading, okay? It's the age of the untruth, the age of the non-expert. Well, actually, what I'm going to say to you is follow the professional manager, all right, for that reason. Now, the way we're going to do it is this. The successful habits you're going to follow are these. Overall, it is two things. I'm going to show you strategies which allow you to keep your losses small and add to profitable trades. Okay? Those are the two secrets of all hedge funds. How are we going to do this? This is how we're going to do it, and this is what I'm going to show you. Most people think it's down to making sure the largest loss you have on any one trade is this. Okay? The largest loss you have on any one trade is 0.5% of your total capital on any one trade. That's wrong. Okay, they read my books, they plagiarize it, but they don't understand it. We're going to make sure you trade so that your trade size is so small you don't lose sleep over any loss. That's the trick, because trading is about psychology. It's not about 0.5% or 1% of your total capital. Okay, it is not about those things at all. What it is about instead is making sure that your trade size is so small that any loss you suffer, you don't lose sleep over. You might think, well, that doesn't even make sense. I'll show you, and I'll explain how and why. Let me tell you something else I'm going to explain how and why, and it is this. Volatility-based stop losses. If somebody said to me, what are the two most important things all professional traders know? And when I interviewed some of the world's largest brokers, went through the biggest brokers and asked them, tell me what your clients, your private investors are doing so right, what your best private investors are doing compared to the other ones. What they said was this. On the data they gave me, it showed this. And professionals use this as well. Volatility-based stop losses. The more volatile or noisy the market, okay, the more volatile a market is, the more noisy a market is, the further away you put your stop loss. Now, I'll explain this as we go through this webinar, but I just want you to understand some of the overview. What does that mean? It means the more volatile, the more, we don't want to be stopped out by a noisy market, a fluctuating market, do you? Of course not. So the more volatile or noisy the market, the further away our stop loss. So we use what's called volatility-based stop losses, all right? And I'll explain how we use those. It is critical to our success as fund managers. What it means is that if the market, our stop losses are always customized to the market conditions. Isn't that clever? And also it means that if the market's more volatile, we're less likely to get stopped out. And if it's less volatile, we can have our stop loss closer in. But you might then say, wait a minute, Alpesh, if your stop loss further out, surely you're going to lose more money. No, because the second secret of getting rich in life and in trading is you also have volatility-based trade sizing or position sizing. In other words, and I'll explain this in detail as we go on. In other words, if your stop loss is further away, you bet a smaller size. So you still only risk losing the same amount of money as if your stop loss was closer when the market's less volatile. That way, no matter whether the market's more noisy and volatile or less, your still risk of loss is small. It's the same amount. And the chances of your stop loss getting hit are reduced or the same, basically. Just because the market's more volatile doesn't mean your stop loss is going to get hit more or you're going to lose more money. That is ingenious. And I'll explain that in more detail as we go along. If I had to, like I said, give you secrets of making money in trading, that is it. Keep losses small through a strategy, which I'll show you. Add to profitable trades without adding to risk. I'll show you exactly how we do that. And these two things, volatility-based stop losses, volatility-based position sizing. But that's too general. I need to show you specifically, how do you know where to put that stop loss? Okay, and how do you know how much money to put into that trade so that if the stop loss is further away, it's a smaller size? Let me, before I get into all of that, let me also tell you this, my friends. 20% of your trades will make big profits. I know the screen might be a bit blurry, but I'm going to be reading everything that's on the screen, so don't worry. 20% of your trades will be big trends, big profits. Now you might say, Alpesh, how come all your trades aren't just big winning trades? Listen, it's not just me. It's Warren Buffett. It's George Soros. It's every other hedge fund manager. Okay, David Harding, all the ones you weren't even heard of. Jeff Bezos, when he was a hedge fund manager before he set up Amazon. Didn't know that, did you? Yeah, he went into tech. Okay, all of them, 20% of their trades were the big trending ones, because trading isn't about having a crystal ball where you can foresee into the future. Anybody who tells you they're right 90% of the time or 93% of the time are just lying. Okay, it's about playing probabilities and getting enough trades which make you the money, and then when they do, you add to those profitable trades, and you never add to your losing trades. And the 80% of your trades are going to be either small wins or small losses, and that's fine. And I'll show you this in numbers, in actual numbers, okay, as well, in just one second. So to give you an example, let's give you an actual example in terms of what we're doing at the moment, what's sort of getting us all hot and bothered and excited at the moment. Let's look at this. Okay, let's look at this screen. Set our screens up like this. And I told you earlier to write down the number 12. 12 means I want you to look at 12 different products. Okay, 12 different products at any given time. Why 12? Okay, I know I've only shown 6. It's because the Windows resolution, if I put 12 on, it's going to be too tiny. So I just wanted to show you these. Okay, why have I said 12? Because each day for 15 minutes, you're going to scan each one of those 12 little windows, and you're going to pick the one quality trade. And all this data is live and real time and free. And I'll show you how you download this and get it. Don't worry, there's a lot to cover. Okay, and the point is this. Let's say you start off with US dollar, Japanese yen, and each one of these bars is 1 hour. Now, a lot of you are going to say, Alpesh, what? Currencies? Never even done it. Aren't those riskier than stocks? Sounds too complicated. I'm going to simplify it for you. I'm going to prove to you it's actually less risky than stocks. Although I'm going to cover stocks in this webinar and which stocks I like as well. But just give me a second, okay? Just give me a second. So we get told through these arrows, the up arrow tells us when to buy and the cross tells us when to exit. And at the moment, we're just out of this trade, okay? So we had a trade here and we had a profitable one there, okay? And you can see here, we had a green up arrow and we exited. So overall, it was profitable, although we had to exit pink cross, half our trade there. The point with all of this is this. Winners add to winners. Write that down. Successful hedge funds, winners add to winners. Whenever we get a winning trade like this one, we'll add to that position. Losers add to losers. No successful hedge fund in the world has ever had a trader who adds to his losing position. So if the trade goes against us like this one, initially over here in the far left-hand corner, we don't add to that position. We never add to it. Okay, losers add to losers, winners add to winners. These are the things that all professional traders do. And guess what happens? At the end of it, they're profitable. Private investors aren't. So winners add to winners, losers add to losers. Now you might say, when, Alpesh? When? Just explain to us when exactly you're going to add to it. Let me just show you with this example here, okay? Because it's a simple, easy one to show. So imagine you got this up arrow, and I'll explain what it is about our trading strategy, which you can copy, which told us the market's about to accelerate. Without any Fibonacci or fundamentals or economic analysis, what were the prices doing in terms of patterns that told us it's about to rise? And why did we get computer automation to do it for us? I'll explain that, okay? So what we had is initially we put a stop loss. Okay, we put it at a distance where, and this is how you pick a stop loss, at a distance where you know that if the price goes there, your strategy isn't working. Our strategy was that it's going to go up. So obviously, if the price went down somewhere around here, we know it's not working. The more volatile the markets, the further away the stop loss. The further away the stop loss, the smaller the actual position size. Okay, and in any event, we know when that stop loss gets to break even because the price has moved into profit, then we know we're guaranteed profits because the stop loss has moved to break even as the price has moved on. That's when we add another position, okay, of the same size. when the initial stop loss comes to break even. Why? Because then we're only risking profits, and winners are adding to winners. Now, that's advanced level stuff. So don't worry if that's too far ahead of you. Okay, that's advanced level stuff, and we'll get to some of that later. But my point is this: before I get on to Trump and Brexit and all the rest of it, it's this: winners add to winners, losers add to losers. We look at 12 different instruments. Why? So we get 12 opportunities, but we only pick one good quality one. How do we pick it? That I'll come to in the strategy section of the webinar. But what products do we look at? My favorite are foreign exchange. My favorite isn't stocks, and I'll tell you why. Because Forex is open 24 hours a day, 6 days a week. So any day that's convenient, any time that's convenient, I can trade it. But there's other reasons. It's a lot lower cost to trade Forex than anything else, and I can really reduce my risks as a result trading Forex than I can with stocks. Okay, and nobody can corner the Forex market, and I'll come to all of that in a second. And it's just as easy as trading stocks. Actually, it's easier. All right, but I'm going to tell you which instruments are my favorite. Now, I already told you Australian dollar, New Zealand dollar is one of my favorites. Okay, but it doesn't mean I don't look at the other currencies. Which time frames? I like the 1 hour time frame the most because I'm going to show you mathematically why that gives me the best return on time invested. So write down 1 hour if you wish, write down Australian dollar, New Zealand dollar, but it doesn't mean I don't look at other time frames. And I'll spend 15 minutes looking to see, have I got a signal? Is the price near it? It wasn't here. That's fine. I'll move on to the next of the 12 windows until I find one which is near a signal. I'll say, right, which trade should I do? I'll do that one. Now, I'll go through the strategy in a second, but my point I want to give you is this overview of how we do it. So why am I only in front of the screen for 15 minutes during the day? Well, 30 minutes in total. There's a couple of reasons. One, my job is to raise capital for my fund. That's the job of George Soros and every other fund manager. Sitting in front of a screen is not a scarce resource. I can get anybody to sit in front of a screen. Raising capital is the scarce resource. So me sitting in front of a screen is not good. It is not good for the company. That's why we do it that way. But there's another reason, okay, that we only do that. And actually, Pat Albor, chairman of the Chicago Board of Trade, the world's largest exchange, told me this. And he said the reason he doesn't want any of his trainee traders ever sitting in front of the screen for too long is otherwise they'll do bad quality trades and they'll do it out of boredom. That's why. And most people don't even get that. They go, oh, I never thought of that. I thought the longer you sit in front of the screen, the better. There's actually another reason why I don't want myself or my staff sitting in front of the screen all day long. Remember I told you the 3 F's of life? One of them is fulfillment. They're going to leave. They're going to bugger off elsewhere to a competitor who says, oh, you don't need to be stuck in front of the screen all day. That's what's going to happen. All right? That's what's going to happen. That's the other reason you can't be in front of the screen all day. Your fulfillment levels will go down the tubes and you'll only earn £10 an hour on the £1,000 a year you might make, or £10,000 you might make, or whatever else. All right? So I know I'm covering a lot of stuff very quickly. What I'm going to do is I'm going to touch upon Trump and Brexit and the stocks I like and the way to trade. Then I'm going to give you the business plan, and then the trading strategy, which has been generating us all these returns so you can copy the strategy. Like I said, strategies are not the scarce resource. I can print it on the front page of the Financial Times. That's not the scarce resource. Getting capital, that's the scarce resource. That's a separate issue, okay? Now, let's talk about what just happened in the US. This is an email I got on November the 11th, which is a few days ago. Hi, Alpesh, been following your publications, and you are the man. Unbelievable. If Trump wins, USD short, that's what I'd said. If Hillary wins, also short. But the most impressive thing is you knew Trump would win. I understand you thought like a Trump voter who would never publicly say, hey, I'm supporting a racist. Voila, market's down. But I'm not sure if you expected the rally like this after the plunge. So let's talk about that. Let's talk about the rally and what happened. Let me show you one more email. I'm going to go through every single email. This came from Spencer. Just one of quite a few, actually. It was great. Just a quick note to say thanks very much. I made some mistakes, as anybody would, that's fine, and didn't make as much as I should, no worries, but I still made £5,500 last night using your mentoring. Thanks also for sending out the emails during the night. This is the night of the US election he's talking about. The info was great, but it also feels like you're not on your own. It makes a difference. Thanks again. Well, that's my job. I want to handhold people. I want to help them. So how do we get around the whole election thing? What did we do? And more importantly, what are the strategy going forward? Let me explain. Okay, that's Trump Tower. It's a picture I took a week before the US elections. And this is what I'd been telling everyone who'd been to my webinars. And those of you who've been on my webinars will know this. Okay, I said to everyone, Trump supporters, like Brexit voters, are understating, so the polls will suggest he will lose. And so the dollar will rally before the result. If he loses, Profit taking sets in, so sell the dollar. And if he wins, panic sets in, so sell the dollar. And it's exactly what happened during the course of that evening. Okay. In fact, I'd said it even before that. I said it on 25th of October. That's my Facebook. I made sure I was in New York a week before the US election, 2 weeks before I was in Tokyo. Okay. And people who follow my blogs and Twitter and all the rest of it will know. And during the US election, I had to be in India because the Prime Minister was there. And like I said, I was hosting the tech summit with the Prime Minister, and that's why I had to be in India, duty to country, but nevertheless was able to trade there because there's a 11-hour time difference. So it was actually perfect. Their middle of the night was our middle of the day. And I said to people, sell US dollar on 25th October around midnight, November the 8th into November the 9th, because here in New York, there's no evidence Trump will lose. And I had to be there, right there, because that's my job. As a hedge fund manager, you'd expect it. My investors would have gone ballistic if they thought I hadn't got my ass into the US or into Tokyo, which is the other major trading center, or I wasn't based out of London. They think, what the hell's going on? Okay. So we made sure we had the strategy. We told them, kept them informed. But more importantly, what does this mean for you? How are you going to make money? And let me tell you something which has been happening in my industry ever since. Okay, so in the last few days, and this is a Bloomberg report, hedge funds are going mental raising money now. Why? Because since Trump, there's one thing they know that's going to happen. Before I tell you what that is, quick commercial break in this regard. See me in Leeds, 22nd of November at the Leeds Investor Show. Use that coupon code Alpesh Leeds. Okay, LondonInvestorShow.co.uk. Welcome. Come and meet me in Leeds because I'm from Leeds, and I'll give you a talk. I only give 2 a year, and normally they're packed out like this. So do come along to that. Enough of the commercial break. Let me tell you the big thing that's happened since Trump and why hedge funds are raising money like crazy, and so are fund managers, and why it's the best time to be a private investor over the 12 months from today. Because, and this is from Bloomberg, moves in stocks the day after the US election, right? The return over 12 months in blue. Every single time, okay, since 1984, the stock market has gone up, but on an average of about 15%, all right? Except once, which was 2000 when we had the tech bubble burst, all right? Other than that, over 12 months after a US election, the stocks just go up like crazy. Put it another way, this one. Stocks for the next 364 days after a US election since 1984 have tended just to shoot up and up and up, all right? So if you just bought and hold and did nothing else, you'd be looking to make about 15% return. But we want to therefore make a hell of a lot more than 15% over the next 12 months, don't we? Because if buy and hold gets you 15%, you obviously want to make a lot more, don't you? Of course you do. You want to make a hell of a lot more. Okay, so the question arises, how much more should you be looking to make? How much more? If buy and hold is getting you 15% for doing nothing and sitting on your backside, then the question arises, what is a reasonable return for a trained private investor who's going to be trading the market actively over the next 12 months? And I'm going to show you what that is according to Bill Lipschutz, Global Head of Foreign Exchange at Salomon Brothers. But first of all, which are the areas which are going to be the most profitable? My view is financials, because as the US government and Donald Trump start spending debt-fueled spending like crazy, and that guy loves debt, we already know that, then the sectors which are going to benefit the most are going to be financials and banks, because obviously there's going to be more transactions in the economy. And guess what? Guess who has the lowest dividend yields? Okay, the highest dividend yields. It's the banking sector. In other words, they pay the most already anyway. And guess which are the cheapest, i.e. which has the lowest price earnings ratio, the smallest number here? It's financial. So even before, this is what a friend of mine sent me from Schroders, okay, on 6th of July, even before Trump, financials and banking were the best sectors to be in. Now it's going through the roof. Let's name names, Alpesh. Running through my algorithm, anybody who knows me knows I love algorithms. I love computers, going through data, going through accounts, and trying to work out which is going to be the most profitable. So over the last 5 trading days before this webinar, these were the best stocks for me based on my value growth algorithm. So I rank and rate stocks. Donald Trump ranks and rates women. I rank and rate stocks, okay, based on an algorithm which looks at valuations, earnings, prices, profitability, revenues, revenue growth, dividends, all this complicated stuff you don't need to know about. And then it's ranked out of 10. Out of the 350 largest British companies, these were the top 8, okay? And already in 5 days, they'd gone up this much. So imagine if we're trading in and out, okay, over the next year. Surely we should be looking to make more than that. If that's what can be made in 5 days, surely we should be looking to make significantly more. The question is, how? Show us the business plan and the strategy, Alpesh, so we can implement it. That's what I'm going to do. Okay, so I'm talking really quickly. So these are the UK ones, and they're not just banking. I mean, you've got BA systems. Why? Because, well, if you want to know beyond just the algorithm, which tells me why, if you want to know the fundamental reasons, might be 2020 hindsight, I'm telling you this, but you'll know it anyway. NATO has got to spend 2% because Trump's told them, spend 2%. So guess what they're going to be doing? Buying a whole load of defense systems. And guess who's big in defense? BA systems. Okay, and I already told you about banks. Well, there you go. Financial stocks right there. Okay, financial stocks right there. So that explains that part. What about the US? For anybody interested in US stocks, okay, this is the same exercise over just 5 days alone. All right, these were the moves, and these are the highest rating ones for the next 12 months. So over the next 12 months, and a lot of financials in there, I know. If I was picking stocks for just buy and hold, these would be the 20. I'd divide my money into 20 equal parts and put each equal part into each one of these, and I'd expect a return of about 15 to 20% over the next 12 months. But that's not good enough. That's not good enough. The return I want for all of you is to show you how we get over 100% per annum. Not every year. Some years we might only get 25%. Others, we might get 200%. On average, how do we target that 100% per annum? How do we do it realistically? Not laughably, not, oh my God, that's high ambition. But how does a professional trader target that for a private investor? Okay, so I'll explain that. Don't need to worry about that chart. That's the FTSE 100. As you can see, all-time high as a result of this, with a bit of profit taking happening. Same with the Dow, all-time high, shooting up as a result of Trump. But that's stocks. That's stocks. Don't worry about that one. Let me tell you what I want to focus on, where I think we're going to get the returns. And this was just the percentage change in 5 trading days from the major currencies. Currencies is where I think we're going to make it. Why? Let me show you why. Let me show you why. This is right here, sterling yen. Okay, sterling yen daily charts. Each one of these bars is 1 day. Right, and that down arrow tells us to sell. I'll explain why in our trading strategy that told us to sell. What it was about these prices which told us that the prices are going to fall. What was it about those patterns? Is it pattern recognition? Okay, which told us there's a high probability, never a certainty, but a high probability that prices are going to collapse. Okay, but let's say, I'm going to use this as an example, and this is sterling yen over a 2-month period from here, when it was 185 yen, call it, okay, to the pound, when it dropped to 165. Just so you're all up to speed. Some of you are beginners, so you're all up to speed, okay? And it's this. Let's say you sell at 185 yen and it moves to 165 yen. That's 20 yen, isn't it? Or 2,000 points. Okay, you sell because it's a down arrow. Sell high, buy low. You can do the opposite. Buy low, sell high. All right? It's the same principle. Okay? It's like the guy at the stalls. You're all familiar with this, right? Now, the beginner will do, say, £1 a point, although I'm going to show you brokers which are quoted on the stock market, so they're safe, regulated out of London and the US, which allow you to do 7 cents or 7 pence a point. Let's say you do £1 a point. That's £2,000 profit, because it was 2,000 points, remember it dropped, in 2 months. We call that the beginner. Why do we call that beginner? Because you obviously want to trade with the smallest sums of money. The intermediate person, who is somebody who's consistently profitable, maybe they've been taught by me, they've been trained by me, so now they're consistently profitable, they're going to trade a higher amount, they're going to take a bigger size bet because they know they're going to be consistently profitable over a longer period of time, even if any one trade might make them losses. Okay, so £10 a point. That's £20,000 profit in 2 months. Okay, that's the intermediate person. The expert, that's nobody on this webinar. Those are the super rich, okay, the ultra high net worth. Those are the people who invested in my hedge fund. People like the founder of Cobra Beer, who's an investor in my hedge fund, or the founder of New Look PLC, Tom Singh, who's an investor. They're the super rich. They're in the rich list, okay? So they're going to do £50 a point, £100,000 profit in 2 months. Forget those, okay, for the moment. But it's just so you know those people exist. We're going to be looking at trying to get you from £1 a point to that. But that's fine. But I just wanted to explain to you the principle. Trading is simple. Trading is simple. You, me, and George Soros all have to make the same decision. And there's only 2 decisions. When do I sell? When do I buy? He gets the same price data as you do. See all this price data, this free real-time data, and you can only get real-time free data with foreign exchange. With stock markets, they don't give you free data. You got to pay for it. That's why I prefer Forex. So you don't having to pay for the data. See all this data, okay, that you see up here. Let's take up, like I said, Australia, New Zealand. All that data, it's moving. That's live. It's real-time. It's free. It's the same data George Soros sees. He's seeing exactly these prices as you and me do, right? So he's got to sell and buy. Same decisions you and me. So surely he doesn't have any advantage over us. If we learn a few little techniques and tricks, we can make sure he doesn't have an advantage. The only advantage he's got is he's got billions under management. We haven't. All right. And you might say, how come fund managers underperform? Of course, they bloody underperform. If you had $1 billion under management, you'd be underperforming. Of course you would. You're going to get your 2% fees regardless of anything. Why should you break a sweat? Why would you? You wouldn't. You're going to be dossing around in your private jet, arsing around in conferences, this, that, and the other. Of course you are. Yeah, it's the biggest joke. When the public goes, oh, why do fund managers underperform? They're terrible. They must be rubbish at their job. No, they're very good at their job. Their job is to get capital into their funds. All right? Their job is to get capital into their funds. You live in a naive world, my friends, if you think their job is to work like dogs. They don't work like dogs. If they wanted to work like dogs, they won't become fund managers. They'd go work on the street, digging up roads all day. All right? So once they get those assets under management, they become fat, slow, lazy. All right, of course you do. You're going to earn 10 million a year for doing bloody nothing. Of course you're not going to work, you bust your gut for some private investor, all right, who's giving you his money. What do you think? They're honest? Of course they're not. Of course they're going to underperform. That's why it's a joke. That's why you need plan B, to be earning money yourself and doing it yourself. That's why I want you to do it. My industry, the hedge fund industry, sooner or later is going to be dead. And it's going to be dead because, like any industry where people get fat and lazy off the backs of the common man and common woman, sooner or later, the common man, common woman's going to say, screw you, going to do it myself. All right. And that's exactly what's going to happen. Sorry if I found a bit overexcited about it, but that is the case. And that's why I want to teach you how to do it yourself, because you're being screwed when you give it to fund managers. So don't. We don't, by the way, we don't have private investors in our fund. We have pension funds. We have institutions who've got no choice but to give it to us. And I'd like to think we work hard for them. Anyway, that's not your concern right now. I won't go through the charts of what happened that night with Buffett and how, brag, brag, brag. We called it right. I showed you the emails anyway. That's not the point. What you want to know is not what we did that night and how I tweeted it and emailed the crap out of it and made sure we, satisfied everybody who are my apprentices, my followers, and all the rest of it. What you want to know is how the hell we're going to do this going forward, Alpesh. That event's gone. Okay, there isn't going to be another election in the US for 4 years. For some, that's not soon enough. All right, how are we going to do it going forward? The reason I say Forex is this: $5 trillion US. So for all of you who've never even thought about Forex, just hold on. I'm going to show you why it's a lot simpler, a lot easier, a lot quicker, a lot cheaper, and a lot safer than stocks. Okay, $5 trillion a day is the average trading dealing volume on Forex. I was in New York just before that election. I was in Tokyo 2 weeks before, and I live in London. All right, those three markets combined don't even come close to how much is trading on Forex. That's why I love Forex. I also love it because I can go make some money there on the way down, up, down, up, down, up, down, up, down. It's far better than buying and holding. Buying and holding might get me 15% a year. Forex on my private account, my personal account, not my hedge fund account, should make me, I should be targeting 100%. Don't take my word for it. Do not take my word for it. All right? Because you're going to think, oh, bollocks, Alpesh. Who are you to tell us that? Mind of a trader, Bill Lipschutz says it, the global head of foreign exchange, as a private investor on his own account, he says. As an institution, they're targeting 20-25% per annum because they've got so much other constraints. But as a PA, personal account, that's what he does. So don't take my word for it. Ignore me. Just follow what the guy in print in an FT book has said. All right, go with that. I'll tell you why else I want you to do this, because you can toe dip. You can be in and out of the market. I don't want you to be stuck in the market constantly, because otherwise you'll get eaten up by the sharks. But if you toe dip, take a bit of money, in and out, take a bit of money, take a bit of money, take a bit of money, that soon adds up. And I'll show you the business plan which allows that. But it also means you don't have to be stuck in front of the bloody screen, like I said, all day long. And you've therefore, through automation and technology, got the ability to smell the roses. In my case, it's not smelling the roses. It's going to Tokyo, to meet investors, going to New York to meet investors, and raising capital for the fund. It's all we do. But if I were to summarize why Forex, it's this: no commissions, no middlemen, low transaction cost, 24-hour market. That's the key reason: 24-hour market and free platforms. In other words, I can trade any day of the week I want, and the platforms are free and the data's free. Not with stocks. You're having to pay a bloody fortune. That's why people don't make money. But there's another reason why we're all here. Okay, this happens to be one particular broker. I'm not recommending this broker. I do not know them. I'm just recommending the data they provided, which I used in one of my FT columns and in one of my books. Okay, and it is this: the profit recorded by their top trader, £1 million in 12 months. The average from their top 100 traders is £100,000. That's way more than any of you've got ambitions for. But I'm just saying, this is what other people are doing, right? So we've got a fear of missing out. We don't want to miss out on that as private investors. Okay, we're not going to target that. Like I told you, we're targeting just 500 to 1,000 a month initially. Because if you can make 1,000, you can make 2. If you can make 2, you can make 4. And let me let you into a way we're going to do it. We're going to have 2 screens. One screen is going to be our laptop or PC, which is going to look like this, where we look at instruments like Australian dollar, New Zealand dollar. You can see it, and this is live, okay? This is what trades we've got on. Anybody who saw my webinar from earlier will know we're shorting Australian dollar, New Zealand dollar from earlier in the day, and it's doing even better, which means you and the earlier audience have been good for us, okay? That's going to be one screen. And for 50 minutes, you're going to scan through 12 windows and pick the best trade. How do you know which is the best one? I'll explain that. Okay, the other window you're going to have is going to be on your iPad or your smartphone or your tablet, and it's going to be this. It's going to be an app, free app from your broker. Most brokers have these. I'm not going to tell. By the way, this is not leading to pick this broker or that. Most brokers out there have these apps which allow you to place trades. Why do I want you to do it on a smartphone or an iPad? Because it's a lot easier, cleaner, clearer, crisper. The user experience is easier, and you can then carry it around with you wherever you go. So let's say it was sterling dollar. Okay, you either buy or you sell. Simple as that. Look at that risk: 7 pence per point. Okay, 7 pence a point. That's all. 7 pence a point. We put our stop loss in. We make sure it's trailing. Job done. Job done. So in the right hand, you've got your phone. This is a screen grab from my phone. All right, and in front of you, you're looking at a laptop or a PC with this. And that is it for 15 minutes a day. That is it. That is it. It is not this. It is not 6 freaking screens like this. Nobody does that. That brown person isn't me. All right. This is an advert which came up on my Facebook page. Look, there's my name, Alpesh. Came up as an advert on my Facebook page. Some muppet is trying to sell me trading courses because he knows I'm interested in trading. This is how dinosaurs trade. This is how idiots trade. You don't trade like this. Nobody trades like this. All right. Just so you know, trading is an inside game. I'm going to bring you on the inside of what professionals do in the last 2 parts of this webinar. One, the business plan on how much you can make and how you make it. That's the business plan. And then the trading strategy so you can implement it and do all the things I've just told you, i.e. how much money to trade, when to buy, when to sell, and how much return you're going to get. So trading strategy and business plan are next. Trading is an inside game. Success in all things in life is an inside game. What does that mean? It means there are 2 types of people. Okay, there's always a rope line in life. We've been a lot of talk in the news today about social mobility. There's always a rope line in life. There are those on the outside of the rope line looking in at the ones on the inside of the rope line. My job is to bring you onto the inside of the rope line. What I mean by that is this. All traders fall into 4 categories. All of them, including you guys. Everyone on this webinar falls into one of 4 categories. There's category A, which is the vast majority of you guys on this webinar. You might have 7 wins out of 10. Yeah, you might have 7 out of 10. You'll have 3 losses out of 10. But your wins are small because you're afraid of losing those profits. So every time you get a small profit, you just take it. And your losses are big because you're afraid of being wrong. So you let those losses run and run and run. You might even add to your losses. Okay, so you get some big losses. So overall, you're loss making. But you say to your spouse, hey, babe, I was right 7 times out of 10. You always talk about to the guy in the pub about how often you're right, but never about how much money you actually make, other than the odd trade where you might accidentally make a bit. That's the vast majority of the public. This is the holy grail, option B. This is what all hedge fund managers want to be, all professionals want to be. To be right 7 times out of 10. When they're right, they'll have some small wins. You can't just have big wins because sometimes the market turns. Small and big wins. They'll have some losses. That's life. Okay, you'll have some losses, but they'll have a strategy which keeps it small. I'll share that strategy with you in the next part of the webinar. Give me about 15 minutes. We'll come to that. Overall, they're going to be profit making. All right, that's what we all want to be. This is the vast majority of professionals and hedge fund managers. Okay, they're right 4 times out of 10. They're wrong 6 times out of 10, but they have small and big wins when they're right, and they have small losses when they're wrong. So they're profitable, but they want to move from that to this so they can be even more profitable. All right. And D is hardly anybody. Okay. They're wrong most of the time and they're loss making. Well, those people either commit suicide or they do the opposite of what they are doing to make money. So that's hardly anybody. Most of you are in A. I want to get you from A to C to B. Got it? Simple as that. Simple as that. How am I going to do it? 2 parts of this webinar to do it. One is the business plan, then the trading strategy. Let's start with the business plan so I can show you what Bill Lipschutz, Global Head of Foreign Exchange at Salomons, told me of why I should do this and how much we can make. You need to know how much you can make to decide whether or not trading's for you. All those webinars you've been to, seminars you've been to, classes you've been to, the amount of money you've paid in tuition and all the rest of it, nobody's ever told you whether this is worth it for you or not. So let's do that now. And I unashamedly call it the road to rich. Why the word rich, that crass, disgusting word rich? Well, one of my hedge fund investors is a chap called Tom Singh, the founder of New Look PLC. And he said to me, when are you going to be rich? And by that, he meant, you've only got 100 million euro of assets under management in your hedge fund. When you're going to have a billion, okay? It's taken you 10 years to get to 100 million, Alpesh. Why aren't you at a billion? I said, bloody hell, Tom, thanks for the slap in the face. I thought I was doing rather good. My mum, who's that lady, was rather proud of me. Oh, by the way, the reason we're with Prince Charles is I'm one of the supporters of one of his charities, the British Asian Trust. That's why. That's where that was taken. Just happens it was at Buckingham Palace. Anyway, so that was his point. And Tom's a patron. He's also an investor in my hedge fund. So I said, right, well, let's just go through this business plan again to get to this road to rich. And we shouldn't be afraid of the word rich. The reason you're all on this webinar is you might think, well, 500 a month isn't going to make me rich, Alpesh. No, but if you can do 500, you can do 1,000, you can do 1,000, you can do 3,000, 4,000, 6,000. How? The first thing is we're going to set our risk capital. Let me show you the business plan now. And this is the business plan Bill gave me. I was at Oxford at the time, writing the book Mind of a Trader, interviewing him for it, and he gave me this business plan, and it changed my life. I left career as a lawyer to do this. Some of you are now considering, do you change careers? Some of you are retired. What do you do to top up your pension, to add to your income? Well, this is what I think you do, and I'm going to prove it to you. Surely as a barrister, I should be able to prove to you. And as a trader, somebody who's actually able to prove to you why you should be doing this on the side. And the reason it shows me driving, well, first of all, it's the road to rich, but also because of this. Remember the first time you got into a car and you had to look at the wing mirrors, you had to look at the steering wheel, you had the indicators, you had the rear view mirror, you had the clutch, the brake, the accelerator, the gear shift. You thought you're never going to learn to drive. Trading's a bit like that. Trading is a bit like that. It's overwhelming and you think, I'm never going to learn it. Actually, you do. You learned to drive, didn't you? However long it took you to drive is probably how long it'll take you to be consistently profitable in trading, because it's a skill. And it just depends on your DNA for picking up skills. So don't be disheartened. All right? Do not be disheartened. All right? So what's the business plan? It is this. Get the pen and paper. Write this down, because there's 2 of the most important parts of this webinar are the business plan section and then the strategy. The first thing we do is we set in any business plan where we want to get to, because a business plan is about where we intend to get to, where our future ambitions lie. So the first thing I did is work out what my maximum loss is going to be in any one trade. So Bill Lipschutz said to me, sat me down, he mentored me. It's because of him, David Kite, Bernard Opity, these other hedge fund managers that I got my own fund and professional trading. And it's why what I used to share in my books and my FT columns, it's not like I wanted to keep it some kind of bloody secret. It's published in my books. Maximum loss per trade should be 1% of your total capital when you're proficient, not on day one, when you're proficient, okay, when you're successful. Maximum loss should be 1% of total capital. All right, so let's say your total capital is £20,000. £20,000 is your total capital. That's not going to be on day one. When I was a student, I didn't have £20,000. What I'm talking about is a business plan, where you intend to get to, what your aspirations are, where you eventually intend to get to. Okay. Maximum loss per trade is therefore going to be £200. This is the business plan, because 1% of 20,000 is £200. We're going to lose at most £200 from where we enter to where our stop loss gets hit. Now, I know what you're all thinking. I'm not going to lose that much. Don't worry. Hang on. Wait. Maximum loss per trade, £200. Okay. And this is what decides whether or not we're about to make a life-changing decision in tonight or not. Okay, win-loss ratio is going to be 70-30. By the way, this is what decides whether the rest of your life is going to be amazingly better than it already is or not. Right? This business plan, like all business plans, it changes your life or it doesn't. Win-loss ratio, assume for the moment we have a strategy, and I'll come to strategy in a second, where we're right 7 times out of 10 or 70 times out of 100. Just go with the assumption for a moment. The average loss should therefore be 1% of £20,000, which is £200, like I said. The average win will be £300. Why £300? Because winners add to winners, and we're going to make sure that we have a strategy where we make more when we win than when we lose. Okay, we're going to make sure of it, right? So that's going to be that one. Now, let's say you do 100 trades. Okay, so Bill said to me, let's say you do 100 trades, Alpesh. So I'm starting to get a bit excited at this point, 20 years ago when I was at uni. 70 of those are going to be winning, according to these statistics, times £300 in profits. That's profits of £21,000. So as you can imagine, I'm starting to get very excited at this stage, aren't I? Of course I am. Okay, haha, he said, wait, 30 are going to be loss-making at £200. That's losses of £6,000. I went, fine. Okay, that's net profit, nevertheless, of £15,000 per 100 trades. As you can imagine, my eyes started lighting up and I started getting greedy and started planning the future and thinking, right, I've got to show this business plan to my parents and break the bad news to them. I'm not going to be a barrister. Thanks for sending me to Oxford, but I'm going to be a trader. And they would have turned around and said, what the hell is wrong with you? But wait. So I knew I had to find a strategy which allowed me to do 100 trades. And I got greedy and excited and said, oh shit, I'm just going to sit in front of the computer all day in my underpants and just trade, be a day trader. Isn't that the highest aspiration? Watch loose women on TV and sit in front of the TV all day and make £15,000 from 100 trades every day. Surely. Obviously not. And I'll explain to you why not in 1 second. But let's just do the maths. If that fantasy of mine was real, okay, watching loose women in my underpants and trading 100 signals a day. Just bear with me for a second, okay? 100 trades per week, let's say we did. Not even a day, but per week. Let's not get too greedy. 100 trades per week. 50 weeks in a year, assume, because you're going to go to the Maldives for 2 weeks a year, aren't you, when you're making that kind of money? 5,000 trades per annum it would mean. Well, 5,000 trades per annum at £15,000 per 100 trades is profits of £750,000. I know what you're all thinking. Alpesh, what are you smoking? We're not going to make 90% of that. We're not going to do 3/4 of that. We're not going to do 2/3 of that, Alpesh. We're not even going to do half of that, Alpesh. What are you smoking? We're not going to do a third or a quarter or a fifth of that. We're not even going to do 15% of that. Hang on. It's a business plan. Let's say you only did 10% of your business plan. That's still £75,000 a year. That's way more than our ambition, which, remember, was just £1,000 a month. So I said to Bill, £75,000? Are you nuts? He goes, nope. Any good business plan, he said, should be pessimistic, right? So don't even take 10%. Take even less than that. So he said, do this instead. Do 100 trades in 6 months or 200 trades per annum. Guess what that is? That's roughly 1 a day. 1 trade a day. Remember what I told you right at the start? 12 windows, 15 minutes a day, 1 quality trade a day. Quality. If you don't have quality, you're not going to hit these targets. That's why I restricted you to 1 a day. Okay, that's 200 trades per annum. That's £15,000 per 100 trades, so it's £30,000 per annum. But hang on, that's nearly 3 times more than the £1,000 a month I said was our target. So if I take a business plan and decimate it and then halve it, okay, I'm still getting 3 times more than the £1,000 a month I'm targeting. So I thought, okay, that's a business plan worth following, because any good business plan should be such that if you are incredibly pessimistic, it is still worth following. So even if you do 4% of your business plan, you still hit your targets. That's a good business plan. You know the biggest problem with business plans? They're over-optimistic. This isn't over-optimistic. This is being under-optimistic, because it's saying even if you only do 4% of your total target, you'll still hit your £1,000 a month. Do you see? So then I thought to myself, hang on, how come everybody isn't rich then? I said to Bill, I said, how come everybody's not rich then, Bill, if this is all correct and true? And he said 3 reasons. Bad teachers, bad mentors, same things, bad strategies. Well, let's come to strategies then, the final bit of the webinar, the most important part of the webinar then. Before we do, let me just recap that. I told you my mum would be back. That's my mum. Okay, that's my mum. I told you she'd be back. 100 trades per 6 months is 200 trades per annum, £30,000 per annum. That's not our target. Our target is 500 to 1,000 a month, or 12,000 a year. Because if you can do 1,000, you can do 2. You can do 2, you can do 4. Because trading, and write this down, is scalable. It is a scalable business. Write down business. I want you to start thinking like somebody who's a business person, but you don't have additional costs. You don't have costs of offices, warehouse, staff, anything like that. That's why trading is the best business in the world. But the critical thing is to make sure that you don't fail. So avoid the bad teachers, the bad mentors. We'll come to that. But make sure you don't have bad strategies. So let's get on to strategies. So I said to Bill, okay, Bill, so how am I going to know when to sell, when to buy? That's the only thing left. When to sell, when to buy. We'll come to stop losses again, and the fact that we put them over there, and that if the stop loss gets hit, we only lose a small amount of our money, so we don't lose any sleep. And then we add to our winning positions when the stop loss gets to break even. Those are little tweaks. Those are like A levels or degree level. But I'm talking about school. How do I know when to sell, when to buy? Okay, because we talked about the setup, 12 little screens. Eventually, not on day one. On day one, you might only have one. You had a second one, a third one, as you get more confident. Okay, but which time frames? How much can it make? Show us how much it makes. Okay, so I said, right, Bill, give me the strategy. He said, what is critical for working out momentum? We're going to follow momentum. What do I mean by momentum? All right, he said this. And this is what I do in my hedge fund. It's what 90% of hedge funds do. What we do, 90% of hedge funds, and by the way, euro dollar is a popular one at the moment. We're short on this, so you can see it there. Okay, we had a long trade and then we're short. We didn't get the whole trade, but we got enough. We don't care. Okay, pink cross means exit half the position. Don't worry about that for the moment. So we had a sell trade. How do we know the momentum is going to be downwards? How do we know the momentum was going to be downwards there? Okay, what was it the prices were doing that we didn't have to be a screen slave? And why are we following momentum or following trends, right? When the prices fall, just piggybacking on those. He said you always want to piggyback on the rich big banks like Salomons or Goldman's or whoever. And the reason you want to piggyback on those is you don't want to try and be guessing the news and the analysis and stand in front of the market only to see the market go away from you because somebody else said, oh, we're going to do something different and drive the market in a different direction. You want to be just copying on their coattails, jumping on their bandwagon, and before they fall off a cliff, get out. Okay. So I said, okay, fine. How do we do that? He said the best way to measure momentum, this is the insight he gave me, was this. Look to see how close to the high the price closes in any given period, whether it's a 1 minute chart, 5 minute, 15 minute, or 1 hour. 1 hour is my favorite, and I'll show you why, because I'll show you how much money all of this makes. Okay. He said, see how close to the high it closes. I said, why? He goes, well, that tells you there's an incipient potential momentum in there. You see, it's a bit like an auction. I've got 20, I've got 30, anybody give me 30, I've got 40, anybody give me 40, I've got 50, anybody give me 50, I've got 50, anybody give me 60. That's momentum. That's the price closing near the high. That tells you that the next period, the probability, not certainty, is it's going to move higher. I said, fine, but I'm not going to sit there with a bloody magnifying glass looking at 12 screens at this. He goes, you don't have to. There's free indicators which do it for you. I said, wait a minute. If there's free indicators, surely everybody's doing it. He said, aha, hold on. Hold on. You see, the indicators which exist, he said, you don't use them the way textbooks do. What you do, and the indicators which measure this, there's lots of indicators. Some are called the MACD, others like the stochastic. They all measure this. They all measure this. So he said, the trick to any decent strategy is 3 sort of secrets to all strategies in life and in trading. First, when you're looking for price moves, look for multiple indicators. So don't just look at the MACD, okay, which measures exactly that. Okay, measures is the price flat to rising. Okay, is the price about to start rising? You look for the MACD in a way the textbooks don't show you. Is it flat to rising? He said, look at multiple indicators, not just the MACD, but the stochastic as well, because they measure that momentum in different ways. So look at multiple indicators. That's secret number 1. Secret number 2 is look at them over multiple time frames. Let me explain. Okay, see that? Okay, I could put that in there if I so wanted, and I'd look at multiple indicators over multiple time frames. Multiple indicators over multiple time frames. What do I mean by multiple time frames? This is the 30-minute time frame, okay? 30-minute, each one of these bars. What he said is, don't just look to see is there downward momentum in 30 minutes, i.e. is the MACD and the stochastic flat to falling, because we're looking at downward momentum, okay, and a short trade, which at the moment is near the lowest it's been all webinar. So thank you all for that. It is not just that, but look at the next time frame along, the 1 hour time frame. Is it also showing downward momentum? Okay, is it also showing downward momentum? And then I have a little traffic light system I put up here, which helps me just judge things very quickly. And he said, what you want to do, you want to look at both of those. And the reason you want to look at multiple indicators and multiple timeframes is you're more likely to have the probability of a big move in your favor. Just think about this logically, ladies and gentlemen. If you've got multiple indicators telling you something, and you're looking at it through short-term money and long-term money, i.e. multiple timeframes, surely the odds of a move, not the certainty, have increased, and the odds of a big move. How many of you ever placed a trade and immediately it's turned against you? That's because you've not looked at multiple timeframes. So we look at multiple indicators and multiple timeframes, but that wasn't all. The Holy Grail wasn't that. The Holy Grail wasn't that. What brought me fame and fortune wasn't just multiple indicators and multiple timeframes. There was a third secret to all trading strategies. It was price confirmation. It was, has the price now moved up? The point was, there isn't momentum if only you've seen it. You need Goldman Sachs and others to have seen it and bought into it, bought into that momentum. Now, they might have found it through different methods. Doesn't matter what methods they found it through, as long as they found that trend. Because remember, they've got the same prices as me. They see the same moves as me. Okay, then we do it. That's when we get in. When we get price confirmation. It was that third thing that led me to fame and fortune, literally. I was at Oxford University, Red Carnation, last exam. I perfected that strategy. I then won awards using that strategy. That's me on the front cover of the business section of the Financial Times, where they said Patel is top FTSE 100 forecaster using this strategy. Okay, the Financial Times then said, do you want to write some books about this? Because this is amazing. And I said, yes, I will, because I want to build up my authority and my credentials so I can eventually set up a hedge fund. So I started writing books about it whilst trading, to build up my credentials. They said, do you want your own column? 200 columns later, I said, of course I do. Of course I do. By the way, anybody's interested, they paid me £1 a word. You know, so it's not like you're going to get rich off columns. But the point is, it gives you the authority to then raise capital in your hedge fund because it proves to the world you really know what you're talking about. All right. That's me in my first ever hedge fund office on Regent Street, Linen Hall. After that, we moved to St. James's, Waterloo Place, and then where we are now, which is Mayfair, Brook Street. Okay. And who paid for that? Cost about $1 million to set up a hedge fund. Merrill Lynch HSBC did. Merrill Lynch HSBC did. They were one of the big ones because they wanted to brand using my name. They wanted my analysis. They wanted the indicator. I said, yeah, I'll charge you. And of course, they're an institution. They were one of several payees, let's put it that way, who I charged. And that's how I got the money for the hedge fund. Because like I told you, when I was a student, I didn't have a bloody $1 million or anything. I had to build it up. No silver spoon, no Donald Trump money for me. The thing is, it was those three aspects. And I'll show you how to download it and apply the strategy yourself in 1 second, which took me from having all the same questions you all do to being a global market expert. Okay, you can see the steps of the journey. It's important you understand the journey because people don't just fall out of bed and become hedge fund managers and professional traders. They don't just get onto Sky News and CNBC and BBC. By the way, anybody who tells you as seen on CNBC, BBC, ignore them. Any idiot can get on TV. Just look at the idiots on TV now. I'm talking about being paid by Bloomberg TV for my own show because I knew what the hell I was talking about. I'm talking about being paid by Bloomberg and being paid by Financial Times because you're that good. Not just, oh, I did a quote. Any lazy journalist will ask for a quote. So then I asked the people who followed me, all the readers of my books, my newspaper columns, okay, here's strategies. Everybody gives you strategies. Why are you still not making money? You've all got strategies. Why are you not making money? So I really wanted to get to the bottom of this for my columns and for my books. And what happened is, before I give you the strategies to download, what happened is this. They told me the key reasons. They said, look, there's all these classroom trading academies which give you strategies. But I said, what's the problem then? Why are you not all making money? They said, well, for a start, they're not self-paced. You've got to go to those classrooms and learn at somebody else's pace. So they said, that's pretty bad. The ideal is it's self-paced. You learn one-to-one with a hedge fund manager, you learn one-to-one. That's the best at your convenience, okay? Not the hedge fund managers, not the teacher's convenience. So it's compatible with your work. So if you want to learn at 3 in the morning, you can learn at 3 in the morning. So there's no hotel costs and travel costs eating into your capital. You can do live trading practice. So you can see the live trades like I've just shown you on screen, and you can back and forth say, oh, this is what I've done. And you can say, oh, this is what we're doing today. Okay, so there's ongoing support. One-to-one, not in a classroom full of 30 people where you feel intimidated. So it's built around you, the individual, because think about it. When do you learn the best? When it's one-to-one. all right, built to use modern technology to educate. Instead of being charged something like £2,000 for a weekend, forget it. That's £2,000 you should be using trading. All right, because I wanted to get to the bottom of why isn't everybody then making money? Okay, because I wanted to solve that problem, because I thought actually there's a huge opportunity here to get people to learn and earn. And this is what it came down to. Basically, without such an indicator, this is what it was like. People trying to pick one thing at a time. And by indicator, I mean this. I mean something which actually tells you, yes, the MACD is flat to falling, and so is the stochastic, multiple indicators, multiple timeframes, and price confirmation, therefore sell short. That's what an indicator does. So it allows you to look at multiple windows and shortens the time in front of the screen. So you can have more opportunities and less time in front of the screen. That's what technology does. These people don't have technology. They don't have an indicator. Therefore, guess what's happening to them? They're trying to pick one thing at a time. Instead, you want to be the employer. You want to be the guy with the technology, which allows you to get lots and lots of opportunities, and you pick the best one. What we then did is we gave this to a group of people and said, well, will this make life easier? And what we found is before that technology, right, before an indicator in blue and after in orange, this is what happened. Afterwards, the confidence in a trading strategy went up. Once they had an indicator, they felt they had more confidence in a strategy. Well, that's what everybody wants. They felt they had lower stress over any losses because they knew overall they're going to be profitable because it was a net profitable strategy. Okay, they felt they had a business plan for long-term profits. Okay, by the way, me giving you this strategy doesn't make you a competitor to me unless you know how to raise capital through pension funds and family offices. So don't think, oh, why is he telling us strategies? Like I told you, there's a million strategies out there. Just go to Oxford University, you get loads of strategies on trading. But an indicator, what it does, it gives you clarity of exits, clarity of entries, and clarity of stop losses. Guess what? Those are three things people always want. They didn't even realize how important it is. And these were the things which were holding people up from making money. So I said to my team, okay, because like any hedge fund, we're also technology. We just create loads of technology. I said to my team, do this. Okay, Project pipspredator, we called it. Create that indicator based on that strategy. So when the MACD and the stochastic or multiple indicators are showing that the prices are closing near their highs, okay, over multiple time frames, and this price confirmation, put that into one simple indication. Buy when the price goes above the horizontal line, because that confirms this price momentum and the odds of a profitable move have increased. That's the technology. That is the technology. Okay, make it that simple so people can, for once, actually get on with making the money instead of every single obstacle they otherwise have of not knowing when to buy, when to sell, where to put the stop loss. But it gets better than that. So people ask, so okay, how much does the bloody thing make then? So what I said is, let's take a typical month. And this is why the 1 hour time frame is the best. Okay, we think. Doesn't mean you don't do the other time frames. It's just that the best returns come from the 1 hour time frame. Why? Well, let me take you through the numbers. Typically, the number of trades in a month we did would be about 25. We might get 75 signals. Backtesting might say, oh, you've got 75, you've got 100 trades. Backtesting is bullshit because nobody does trades at 3 in the morning. Okay, so backtesting might suggest lots and lots of trades. I'm talking about what you actually did. Also, the problem with backtesting is you don't enter that trade immediately. You might have slippage. You might get in a little bit late. You might exit a little bit late. We're talking about what actually happens. By the way, it's a criminal offense to market a hedge fund on backtesting. That's why anybody who ever mentions backtesting, I laugh in their face. Okay, so what would the actual number of trades in a month? Typically 25. Okay, maybe in a good month, well, I say good month. On a busy month, it might be 28. Maybe on a quieter month like August, it might be as little as 20. Doesn't matter. Typically 25 trades. The net pips captured in a typical month are 2,250 net pips. What does that mean net? It means winning minus losing points. Okay, so we capture 2,250 points. What does that mean in terms of profits? I'll come to that. In a good month, like Brexit or the US election month, November, that might be as high as 4,000. Okay, in a bad month, that might be as little as 0. Alpesh, you said you make no money in some months? Yeah, don't worry. Okay, we're talking about typical. There's no point in me just bragging to you, oh, we did 4,000 in November because of Brexit. Well, that's a one-off, you know, or in June, Brexit and Trump now. That's a one-off. I've got to tell you what we do on average. And I've also got to tell you what we do in the worst months and in the best. So how do you guarantee a monthly income? You can't guarantee a monthly income. What you can do is when you get a bumper month, you take the excess, okay, and you set it aside for when you get a lean month. So on average, like I said, 2,250 in a month. The maximum loss on any one trade is about 50 points before we get stopped out. So 50 points before we get a stop loss hit, okay, on any losing trade. Now imagine you did $2 or £2 a point, okay? This is the most important bit of the webinar. Let's say you did £2 or $2 a point. Well, you'd lose 2 times 50, which is £100 or $100. That's a lot of money. Nobody wants to lose that. Wait for it. Wait, don't worry. But £2 or $2 a point times 2,250 is £4,500 in a month. Okay, hang on. I said that most people only want to make about 500 a month. 500 a month, or 10% of that, which means you can trade with as little as 20 pence a point. That's what I want you to do to start off with. 20 pence a point. Don't get greedy, get rich slowly. Build those skills up slowly. It's like when you learn to drive. You don't learn in your dad's Mercedes. You go in the driving instructor's car in a car park so you don't mess it all up. Okay, so we're going to start small. We're not going to go on in a Ferrari on the bloody motorway on day one. Okay, because nobody's going to turn the markets off. Do not be in a rush. It'll kill you. As I've said in probably half my Financial Times columns, the thing that kills people is they're in a rush to get rich. So let's say you start off with 20 pence a point. That's 500 a month. That's what I love. So then I said to people, okay, now solve that problem that you can start with small sums. You've got an indicator to tell when you buy. So what other problems have you got? I said, tell me everything. Tell me everything that is standing in your way to making money. They said, okay, fine. You've given us all of that, but we also want to be handheld by a hedge fund manager. If you're going to tell us, Alpesh, then yeah, we want a hedge fund manager doing it. We want somebody who's a professionally trained communicator. I'm a barrister and a TV presenter as well as obviously being a trader, because we don't want to get bored, right, by these people. All right. Remember at school, the best teachers were the best communicators. All right. We want somebody who's paid by Bloomberg and Financial Times, because those are the two most trustworthy financial brands in the world, bar none. Okay. So as a presenter for Bloomberg, paid, as a columnist for Financial Times, I said, yep. Okay. Credentials. I understand that. Otherwise, what's going to happen is you're not going to follow through. Want somebody who continues doing research and development on their trading. I'm a visiting fellow at Oxford University, Corpus Christi College. I lecture on behavioral trading. I just did one in November. That was at St. Hilda's College. Okay, but my point is that, yes, you're absolutely right. It's important, because I told them, tell me everything, including the icing on the cake. Okay, and they said, well, we want somebody who's also won awards for their picks, not awards as best teaching academy. Who cares? Who bloody cares? From a name you've never heard of, so it's a fake award anyway. We're talking about a proper award from the Financial Times for calling the market bloody right. That's what's important. Okay, because the other people out there, they're like Ronald McDonald. So the questions people then ask is, can it make money? Well, I've shown you, and I'll show you one or two other trades in a second, and we'll show you the live trades again. Is it easy? Yes, because you just follow the signal, buy and sell. Can I do it anytime with a day job? That's so important. You've got to be able to do it with a day job. 15 minutes before and after work, one quality trade a day. How much does it make? I showed you. Does it make life easier? Yes, because I can do it whilst watching a webinar. You can see it here. You can see it here. We're still short on Australian dollar, New Zealand dollar, let alone everything else. Oh, by the way, I should say on the FTSE 100, because people want to know this. Okay, we've got a short trade there, so we're still short on the FTSE. Where we go. Okay, we're saying, somebody asked a question. So if ever we get stopped out of a trade, we'll re-enter. We'll re-enter if the signal's still there. We'll re-enter. That's important, because it means our losses are always limited, and we can still get into the trade. We can still enter. Okay, and you can see all these 3 arrows are down. So on this, the FTSE 100, we're short. We're profit-taking mode at the moment on the FTSE 100. All right, just so you all know. Are there checklists? I'll give you the same checklist I give my trainees who are fresh out of university or college when they join the hedge fund. They're really simple, idiot-proof rules. I'm not saying anybody's an idiot, but I'm saying idiot-proof rules. I've got a couple of them looking at me in the office now when I said that. Yeah, you are one. But okay, you're going to get those rules. But let's look at some of those trades. What do they actually look at? when you're consistently profitable, when you've sort of graduated to profitability. Okay, what does the business plan look like once you've executed it, you've followed all of this? What's the promised land look like? This is what it looks like. Full disclosure, this is not my trades. These are trades of my apprentices who actually followed the indicator and did the trades. And they did euro dollar 5 minute. I don't like 5 minute. I told you I like the 1 hour, but anyway, students will do what students will do. Okay, so this is typical trades, and they've got to send me these before I know they're consistently profitable, what I call graduated. There's no formal graduation, but it's just so I know they're consistently profitable because I keep an eye on them for the rest of their lives, actually, for as long as they want me to. Euro dollar 5 minute bars, 3 hours. June and Michelle, I will tell you how, and John as well, I'll tell you how to download this. Give me 1 second. I know you want to. 3 hour bars. 3 hours, 75 pips, including additional positions. 75 times $30 a pip. Okay, 75 times $30 a pip is $2,250 profit. Not me, one of the apprentices. Why is he doing such large sizes? Because he knows he's consistently profitable, and that's why. Okay, another apprentice, full disclosure, not me. This wasn't one of my trades. Euro dollar 15-minute bars. It was one of the apprentices using the indicator because we want to make sure they're consistently profitable, getting the knack of it. 9 hours, 73 pips, including additional positions. 73 times $30 a pip is $2,190. Okay, got it? $2,190. I won't go through every trade. Any strategy should have huge credentials. I don't mean an actor on video or a random member of the public from Croydon or Manchester saying how great, Double Decker or whoever the trading instructor is. Okay, I'm talking about the chairman of the Chicago Board of Trade saying it in print on the cover of a Financial Times book, so he's got a reputation to lose. This is what he said about my pipspredator strategy. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies while capturing the ethos of successful traders. A bit of a mouthful, but that's what he put it. Don't worry about that. Don't worry about that. I wanted to get people from this to this, this to this, because that was the problem to be solved. And without an indicator, the problem was this is what they were doing, because we're trying to get to the bottom of why are people still not making money? How come everybody hasn't set up their own funds or trading on their own account or have plan B in trade? It's because they're trying to do one thing at a time, and even that, they were getting bad strategies, bad teachers, bad mentors. Okay, instead, this is what an indicator does, gives you that opportunity. And this is the best quote I got from any member of the public, and he's one of my apprentices who used it. He used to work at Barclays Bank in London, now lives in Dubai. Him living in Dubai's got nothing to do with me. Okay, I love the pipspredator. I just started using it and simplifies my trading, especially as I have a day job, so trade around that before and after work. It's already started delivering results for me. Just want to say thank you. It's the only member of the public I'm going to quote you because, how do you know members of the public? You can get hundreds, okay? You always want to learn to trade from a hedge fund manager. It's as simple as that. If they used to work at Thomas Cook or something else, ignore them. Only a proper fund manager, a professional who does it for a living. Simple as that. You want to know the value proposition of indicators is this. You want to know when to buy and sell without being a screen slave. Okay. It's got to be the easiest way to trade. It's got to be fast, easy to use, and downloadable in 10 minutes. Okay, otherwise it's too complicated. It's too you don't want your life being more complicated. You want to make it less complicated. It's got to be something which gets you a second income. All right, it's got to be something which gets you a second income, a side business for you out of a box. A lot of people are looking for side business. That's what it's got to be. But also, it's got to be this, and this blows people's minds. It's got to be lifetime hand-holding until you succeed, at no extra cost. It shouldn't be that you're paying every day, each week, each month to get to profitability by speaking to that fund manager. They've got to be good enough, confident enough in their abilities to say, I know I can make you profitable. That's why you can have me for the rest of your life, because you're not going to need me for the rest of your life, because I'm going to get you to profitability. So I'm going to make you that warranty, that guarantee, because I know I can deliver on it. And the only way to prove it is to say, hey, you've got me for the rest of your life until you're profitable. Got it? Because it should open the door to a new life. That's the essential parts of it. Okay, look, bottom line, no bullshit. That's why we're all here, because people want to make money for a new life or a better life or whatever. So what I thought is, you know what? I'm going to steal an idea from Donald Trump, who in America does The Apprentice Show. I'm going to steal an idea from Lord Sugar, who does The Apprentice Show in the UK. And I'm going to steal an idea from the hedge fund manager, Jeff Bezos, who used to be a hedge fund manager at D.E. Shaw and then set up Amazon, that technology company. I'm going to do the technology, and whether it's my hedge fund, which gets me $1 billion under management, or this technology, which I think is the Google of trading and will get me to get me $1 billion valuation, is offer this technology. Is I'm going to take apprentices, give them this indicator, and this is to make sure that they can all learn it and be tuitioned up, okay, and let them get to profitability in small groups like Lord Sugar does, 25 at a time. And what I say to them is, I'm going to do better than that. I'm going to make sure they got 30 days to try it all out. No quibble, money back guarantee, 100% money back guarantee, no quibble. So you don't even have to send me the trades, and signed copies, physical copies of 2 of my most recent books, just for doing me the honor of trying, because I want to wow people, because I think this is going to be a $1 billion business. Okay, it's a separate spin-off technology company. Like many hedge funds, we have our own tech arm, and it's my little pet project, because I think through this technology we can long last take normal traders, normal private investors, and turn them into profitable ones, because it removes every obstacle that they've ever faced, including hand-holding by a hedge fund manager, as much support as they want. Okay, so they can instantly download it and start trading. And what I do, the reason I say not 7 days, not 14, not 20, but a whole month, because I'm confident. I'm confident they're going to make money. And the reason I also say lifetime access to me, lifetime mentoring through a dedicated website where you've got loads of materials, is because I know you're not going to need lifetime Skype calls, webinars, and access to me, because you're going to get profitable and get on with it. At any given time, I'll have about 100 people going through the program, but I'll only get a maximum of 3 emails in a day, because they're busy learning and earning. Okay, they're busy earning. If I get fewer than 3 emails in a day, I can take on new apprentices. That's the rule my secretary has set for me. And I take them on in batches of 25 at a time. Why? So that the mentoring is manageable. You can't take them on in hundreds and thousands, obviously. But it's also the same principle Trump and Alan Sugar used. You take on a few apprentices at a time so you can train them up properly. Use the indicator as first come, first serve. I want to get you to profitability. I want it to be the last ever webinar you go to, the last ever seminar, the last ever book you buy, so you can get on with profitability and hand-holding for life. And I'll show you what mentoring is in a moment. Hand-holding for life from a professional, okay, a hedge fund manager, because I think this technology is going to be a $1 billion business. I'm going to get venture capital investors into it. I've been speaking in Tokyo to SoftBank, and in London, and in Silicon Valley to Google Ventures. It is, however, first come, first serve. Okay, and what I'm going to do is prove that all this works. Okay, prove that it all works, and then show the venture capitalists, through you guys who get profitability, look, it works. I'm always going to be doing the mentoring. Now, in future, we're going to make it £2,000 a year for the indicator, £2,000 a year for mentoring. But for you guys, it is going to be just a one-off fee. Why? Because I want to wow people. I want to get them on board, and I want to keep showing the venture capitalists this is a $1 billion business, because it's an algorithm, just like Google is a search algorithm. This is a search algorithm which tells you when to buy and sell. It scans the markets and tells you what's going to go up, what's going to go down, and when to buy, when to sell. But it gets better than that. Not only is it one-off fee for both lifetime mentoring and the indicator combined in one, and in future, it's going to be £2,000 a year for the indicator and the mentoring. Not for you guys, not for you guys. Okay, and when it becomes bigger, there'll be other teachers doing the mentoring. But for you guys, it'll always be me for life. And upgrades are free for life. There's no upsells. There's no other sort of fees. There's no monthly fees. There's no charges. Nothing like that. None of that nonsense. Okay, congratulations. We've got one in. Emma, congratulations to you. Congratulations to Polly. Polly. Congratulations to you, to Derek. Well done, you're in. So what happens is, let me tell you how I sort of cheated and stole an idea from Oxford University. You know what I did? This is the idea I stole from Oxford University. Okay, and it is this. I'm going to answer all your questions. Keep the answers coming in. I'm going to keep on doing it. Okay, as well. Mentoring is this. Okay, I stole it from Oxford. Not only do you have email access to me, I'm going to show you the videos that we have as well. I've got bite-size, because people wanted bite-size mentoring, 100 hours of bite-size mentoring. You don't need to watch them. You don't need mentoring at all. You can download the indicator and start straight away, okay, because I've got a dedicated website. There's a 12-week bite-size course for those who want more hand-holding. For the absolute beginners amongst you who've never even placed a trade, you might want to use the mentoring. For those who have and done loads of trades, just download the indicator, start trading straight away. A little trading manual I give my trainees as well. And it's all bespoke because we use Google Forms to ask you questions. Then that gets fed back to me. You do your business plan, you feed it back to me, you do it each week. So I know that you're progressing. But you don't have to do it according to any schedule. You can take as long as you want because you've got it for life. Okay, so just want to make that clear to people. Oh, we've got some more. I've got to mention Thomas, Ian, Havinder as well. Ivanovich, that's a bloody long name. Ivanovich, must be Russian, my friend. Forgive me if you're not. Okay, congratulations, you're in. Yes, you can download it instantly. Like I said, it's a technology company I'm going to be spinning off. The ultimate ambition is to IPO the thing eventually. Because look, why would I do something unless I think it's going to be huge? Full customer support means me. It is my pet project. You will be dealing with me directly via email, via Skype. Every Saturday, I do webinars, 6 live webinars for those who want to do them. 11 a.m. on stop losses, 12 o'clock on entries. These are for my apprentices only. Limit orders at 1 o'clock. Trading psychology at 2, money management at 3, and adding to profitable positions at 4. Every Saturday, okay? Step-by-step instructions through a manual. You see, people want to learn through different methodologies. By the way, put your name in the box so I know you're through, okay, on that. And simple, short trading manual on that, okay? The whole point of this is it's very practical. Like I said, Anthony, very practical. Flat to rising MACD and stochastic, multiple time frames and price confirmation, very practical. That's how you identify an incipient trend. That's when you buy. When do you exit? When the momentum runs out. In other words, the MACD is no longer flat to rising. Okay, your stop loss is volatility based, specifically in practical terms. How far? Well, average true range can be used for that. For those who don't know what it is, you can look that up. Maybe about 3 times ATR, and your position size is such that if your stop loss gets hit, you only lose a maximum of 0.5% or 1% of your total trading size. You add to your profitable positions when your trailing stop loss hits break even. Anthony, that's not academic, that is practical. Got it? You do not want to be doing market analysis. You do not want to be doing hard work like trying to second guess the FOMC. Okay, because otherwise what will happen? You'll be screwed. You'll be gambling. You'll be just spending all your days doing technical analysis. I've written 18 books. I've spoken as the chief guest twice at the Society of Technical Analysts. I know technical analysis, every single indicator out there. That is not what makes you money. Making money is about knowing when to get in, when to get out, and those are the rules behind it. So Anthony, I hope that's a good summary of the practical aspects of it, okay? It is not, Anthony, nobody trades on the basis of, oh yes, I think there's going to be greater spending by Donald Trump next year, so defense stocks will go up because of the NATO alliance, and also banking stocks will go up because of that. That is not, that's academic, because that doesn't tell you when to get into those. Although I have told you for a 12-month period, buy and hold the index, but that's only going to make you 15%. Okay, or buy and hold the stocks I gave you, that's only going to make you 15%. I don't want you just making 15%. I want you getting to that 100%, which is why I gave you the business plan. That's the level we're dealing with here. We are not dealing with the Economist or the Financial Times. We are dealing with actual trading. Okay, I don't want to bullshit you with market analysis saying, oh yes, well actually with an increased budget deficit, the dollar should actually be under somewhat pressure, negative pressure because of the current account deficit and also crowding out of the private sector due to the deficit conditions, and therefore you should really look to. That doesn't bloody help you. What helps you is sell here, buy here, based on momentum. How do you measure momentum? When the price is closing near its highs. Got it? That way I get you into the mind of a trader. Get you into the mind of a trader. There's lots of videos on turning trading into a business for those who want to do it. Okay, videos as well as, of course, the money back guarantee, and you get to keep my 2 books in any event, the 2 signed books. The ultimate aim is, ideally, subject to legal confirmation, I want all my apprentices to become shareholders. They'll be given shares in the company. So when it IPOs, which is the ultimate aim, they'll all benefit from it that way. But that's subject to legalities, okay? There's no upsells, there's no monthly charges, there's no weekly charges, nothing like that. Is a one-off fee, okay? Customized trading videos, because if anybody asks me, Alpesh, I didn't understand this bit, I'll create a video for them, or I'll do a webinar for them, or whatever else. The mentoring is lifetime for this reason. If I didn't believe I could get you to profitability, I would never give lifetime mentoring. I give it because I know I can get you to profitability and you're not going to be bothering me. Okay, you're going to be part of my trading club. What do I mean by that? What I mean by that is this. You know, all the information I get from our bankers who are Edmund the Rothschild, or Goldman Sachs or whoever else. I share that data like I did in my Financial Times columns, so you get an insight into which way the market's. Just like I gave you the stocks earlier on, you get that insight. Just like I gave you what's happening, where the smart money's putting its money. That in itself is part and parcel of making sure everybody's totally happy, okay, with all of this. Raymond, you are in. So is Celine. So is Roberto. So is Joe. I don't know if you're a he or a she, Joe. Congratulations. I'm excited for you, Joe, as well. Anthony, I can go through it with you again in terms of sort of summarizing some of that stuff. Hope I didn't sound annoyed, Anthony. Forgive me if I did. My friend. Okay. I want to make sure any questions at all you've got, please put them on the chat box. I will stay here till 4 in the morning if I have to answer these questions. And the reason is this, on anything to do with the market at all. And the reason is simply this: you've done me the honor of giving me your time. Therefore, I'll give you the honor of spending as long as it does to make sure every single one of you is satisfied about the market, about sectors. You can ask me anything to do with trading, because when you're a global authority, guess what? I love this stuff. I'm passionate about it. I'll show you the dedicated mentoring website. I told you about the 6 live webinars, Skype access, email, meet me at my office as well. Let me just go back a bit. Let me show you the dedicated website because I love it. Okay, let me just show you that in a second. I've got a few more shout out names. Chloe, congratulations to you as well. I've got William, you are in, and so is Andrew. Congratulations. William, Andrew, you got very regal names on this webinar. I've got royalty here. Okay, congratulations to the both of you. You are in as well. Okay, no, it's a one-off fee. There are no monthly costs. I know why you're all asking this, because I know some of those people out there, they start hitting you 2 weeks later saying, oh, you're not profitable. Oh, didn't you know you got to do an advanced thing? Oh, you got to release this part of the data feeds and this. There's none of that bullshit. Because if you're profitable, you act as ambassadors. And if you act as ambassadors, we get closer and faster to $1 billion company. Some people go, $1 billion? What are you mental? Remember what I said. It's going to be £2,000 a year for the indicator and £2,000 a year for the mentoring, not for you guys. And there'll be other teachers around the world. So before you know it, and we're talking about a high profit margin product, because it's a bit like Microsoft Windows. The marginal cost is next to 0 on each new product. That's why. Anyway, that's the business part. You don't really need to worry about that. That's my problem. Okay. Why would I want to be in technology? I already have been. Like I said, when you're with the Prime Minister in India on a tech summit, you are a technology specialist. Most people just don't know that I am in that idea. Ian, I will hold it for you. Do not worry. I will hold it for you. That is fine. Happy to accommodate you. Nicholas, yes, indeed. That's who I'm referring to. It's laughable that there are people out there teaching you to drive who've never driven a car. In the same way, there's people out there who've never managed money, okay, who are trying to teach you how to trade and run money. But I want you to have that plan B. I want you private investors to do it for yourself, because I'm telling you, my industry is fat and lazy. It gets money under management and then it doesn't perform because it doesn't need to perform. It's got a captive audience, which is why, as an insider in that industry, I'm telling you, do it yourself. Learn to do it yourself, not only because jobs aren't for life, our pensions aren't paying anything, and we need to find new ways of generating income at low risk. Real estate, fine. Just diversify and do this as well, because 7 pence a point is what I want you to do. I want you to start off really small. I will never tell anybody get rich quick. Get rich slowly. Okay, a little bit of income at a time. It's far safer, because when you do it too quickly, you blow up. I've got a question here from Jens and from Bryony, which is this: how do you pick a time frame to trade? And I've got somebody else. I just saw it. Was it Derek? Who asked me which are your favorite pairs? There it is. It was John. Alpesh, what are your favorite 12 pairs? Let me answer all of this. And what about picking a stop loss? When to add to a profitable position? And when do you take profits? Well, Jens and Bryony and everybody else, the good news is with the indicator, I've got a very simple guide which teaches you all of that. It's short, it's simple, it's clear. It turns you into a pro. It's got video so you can watch over my shoulder and I watch over your shoulder, because I show you how you can send me your trades and ideas. My favorite trading pairs, Australian dollar, New Zealand dollar is right up there. Okay. In one sense, the ones with the smoothest trends tend to be, and I want you to write this down, tend to be the ones which aren't the major pairs. So sterling dollar tends to be a bit harder to trade than Australian dollar, New Zealand dollar. But US dollar, Canadian dollar, because it's not a major pair, tends to be a bit easier. Okay, or sterling Swiss franc tends to be a bit easier because it's not a major pair. As you come through, put your name in. Oh, by the way, the best times to trade when you get the biggest trends, okay, is when the market in the UK is opening. So around 8 to 10 a.m. UK time. If you want to translate that into your own time frame, just put it into Google. What is my local time when it is 8 to 10 a.m. UK time? Because that's when you tend to get the smoothest trends, by the way. But that doesn't mean you don't trade at 3 in the morning. Do that as well. I'm just saying when it's the easiest. It's a bit like saying, oh, Alpesh, when's the best time to go visit Harrods? Oh, well, the roads are quietest at midnight. Yeah, that's all. It doesn't mean you don't go at other times of the day. That's all. How do you know I'm the real deal? I always like showing people this because they go, how do we know you're the right person on the internet that we're doing? How come you're not just some imposter? That's me on BBC News. That's the 300 million audience program. I am not going to dick people around, mess them around for the sake of £1,000. I want to use this TV platform and the global reputation I have to create a billion-dollar technology company. Just as I did with the hedge fund, get to 100 million euros. I want to get that to $1 billion. Okay, but I want to do this with the technology company because technology is where it is at. It's where all the action is at. Kevin, congratulations, you are in. And this is what I was saying in the newspaper report. The markets are not going to crash just because Trump's going to be president. I called it before that, okay? And this is the point. I'm willing to put my neck on the block internationally, all right? That's how confident I am with these things. Because when you're good enough, you'll do it. And you'll say to the other people out there, because I'm competitive, I'd be to say, you know what? I'm the best teacher out there. I'm the best Financial Times columnist out there and the best TV presenter on finance out there as well. That's not arrogance. That is just somebody who believes that when they're good at something, they're going to shoot for the moon at it. Okay. And that's the attitude to have in trading. That is the attitude to have. Susan, congratulations. You are in as well, as is Kalvir. Congratulations to you as well. Let me show you the website, the mentoring website, in case you don't want to just download the indicator immediately. Actually, before I do that, let me show you something else, which is a bit exciting as well. If I can find it, which is this. I'll just show you. So you go to alpeshpatel.com/go. Okay, you see the extended validation. That's the company name, and it's extended validate. That means it just means it's a bit more secure than anything else. Okay, works on all time frames. My favorite, as I showed you, is the 1 hour time frame. You get direct support from me for the rest of your life. When you're not going to pay each month, each week, there's no upsells, no monthly charges, no ongoing costs or future charges, because I want you to get to profitability. My interests are aligned with yours, and you got 30 days no quibble as well. In future, like I said, it's going to be 2,000. But for you, that isn't, it's not going to affect you. You can use PayPal. I just want to clarify this. You don't need a PayPal account to use PayPal. You can use Amex on PayPal. That confuses people, but you can. Okay, and it's Commodore secure, and you got PayPal security. Click on Add to Cart. Okay, and then just fill it in, and you can download it and start trading this evening, actually. And when you start trading this evening, it might be that you start looking at trades like this, the Australian dollar, New Zealand dollar, because the market is open all night. Start trading tonight. It's open 24 hours a day, 6 days a week, and you can see it there. You'll download that. You'll see the videos on how to install the indicator. If it takes you more than 10 minutes to install on Windows or Mac, let me know, and I'll install it for you through a live Skype call. So don't worry about that even, okay? And we'll have a chat. Come and meet me in my offices in Mayfair as well on Brook Street. I'll take you for a coffee. It's as simple as that. Or in Leeds on the 22nd of November. Come and see me then as well. The point is this. Easy to download, quick to install, because we had to remove every single obstacle to trading. If we didn't remove every obstacle, then we'd still have the same problems that people have always had. Do you know what I mean? Okay, so that's why. Now, on the dedicated website, you've got a 12-week mentoring course. Take as long as you want over it. Ask me questions at any time on it. You've got live chat on the website. You've got email as well. But this is what I like. Come to my offices in Mayfair, not 1 St Andrews Hill. That's the registered office of the company, but I want people to know that. I want them full disclosure, okay? Email address there. You can Skype or call me or whatever. I prefer emails because we can then do it in our own timings, whatever suits us. But also, through LinkedIn, you'll see I'm the real deal because you'll see I'm connected to who I'm connected to, okay? How do you validate somebody's the real deal? Well, you look at who their social connections are. So when you got number 10 and CEOs of banks, you know they're not bullshitting you, okay? But not only that, as an apprentice of mine, I'll make sure you can have connections to anybody. I'll introduce you to anybody on LinkedIn you want, okay, as well. on there. So that's what I like showing people that. But let me show you what I love about this 12-week mentoring course. Bite size it's broken into. So it's not just about mentoring. Most people just want to download the indicator and trade, but this is for the beginners, people who want the mentoring, okay? And in bite size, it gives you things like cheat sheets on how to place trades in quick, easy steps, or if you're too busy to trade, what to do, and also questionnaire, a mentoring questionnaire and videos and everything else over 12 weeks. And it's very structured. So it gives you those structures as you go through, okay? Ian, delighted you're on board. I'll double make sure that you are. Stephen, I'll come through the currencies again, which ones that I like. How do I get the real-time feeds? Dennis, I'm going to email you, all of you, the ebooks and how to get the real-time data feeds for free for life. So don't worry, Dennis, check your spam folder as well. That'll be emailed to you in the next, if it's not already in there, in the next, give it another hour or so for all of you, not just the apprentices, everybody, how to get the real-time data feeds as well, okay, and the ebooks. So nobody's left unsatisfied from all of this, okay, all of you, not just the apprentices, okay. And on the mentoring, you're going to fill in questionnaires like this, so I get to see what you're weak on, what you're strong on, so I can tell you, focus on this, focus on that. And through that dedicated mentoring website, you can search any issue, including ATR. You might say, oh, I need some information on ATR or any mentoring issue, but you can just contact me as well. The reason it's like this with little cheat sheets and images and diagrams is because some people are advanced, some are beginners, some like videos, some like text, some like to speak to me, some like webinars. Do you see what I mean? Whatever you prefer, you're catered for. Some want to be left alone and just download the indicator and start trading immediately. They're catered for as well. You see what I mean? Which currencies do I like the most? Okay, let me run through that again. Australian dollar, New Zealand dollar, and my favorite currencies are the ones with the smoothest trends. Those are the ones where it includes at least one of these in the pair, okay, i.e. the lesser known currencies like Canadian dollar, Australian dollar, New Zealand dollar, Swiss franc, okay? So as long as one of those is in the pair, for instance, sterling, New Zealand dollar, as long as one of those lesser known currencies is in there, what's called a minor currency, they tend to have less volatility because the banks are less likely to trade them, so the trends tend to be smoother. That's why I like them. On brokers, let me tell you, and by the way, I give all this inside information to apprentices anytime they want it. That's the whole point. You've got constant access to me on anything to do with trading at any point, at any time. Okay, that's the whole point of it. So don't worry if you're an apprentice, you're going to get this forever, as it were. But let me tell you with brokers, never trust a Cyprus regulated broker, okay? Because Cyprus is just like the Wild West. It really is ripping people off. And I help my apprentices with their brokers and their broker issues, especially if they need to get money back. Let me tell you what has happened in brokerage in recent years. Okay, brokerage has become a business. Oh, by the way, US dollar, Japanese yen, 4 hour. We're long on this at the moment, and we're going to continue, I think, being long on it for the moment, just in case, because this is what I meant about some of the more proactive or the major. Oh, by the way, the major currencies are US dollar, Japanese yen, okay, sterling, and euro. Now, just because I said I like to trade a major with a minor doesn't mean I won't look at just a major against a major like a US dollar, Japanese yen, okay? I'm going to look at all of them, but I'm just telling you which ones I like. The best time frames is the 1 hour, and anything which includes Australian dollar, New Zealand dollar, Canadian dollar, or Swiss franc always tends to be a bit smoother, I find, okay? Now, let me tell you with brokers what happened. Brokers used to match buyers and sellers, just like estate agents match buyers and sellers. Then brokers stopped doing that. What brokers then started doing is they realized that 90% of the private investors lose money. So what brokers then started doing is they said, well, if 90% of private investors are losing money, let's take the other side of the bet. Let's be like estate agents. So what these dodgy little brokers started doing is they started acting like estate agents and, like casinos, like casinos. They moved from being estate agents to casinos and taking the other side of the bet. So the way they screw you is they'll fix the price. They'll won't let you get out at a proper price. And there's a lot of dodgy brokers out there, okay, who are doing this. So the brokers that I like and which I think are the best brokers are the ones which are what's called blind agency. In other words, they don't know whether you're buying or selling. And also, as well as being blind agency, they don't bet against you. They just match buyers and sellers. So they're less likely to rip you off. I will email all of you, not just the apprentices, all of you, the 3 brokers which are listed on the stock market, so they're double regulated. The names of the 3 brokers that I use, like, and trust, which won't rip you off. And if they do, contact me and I'll give them a bollocking, because I'll threaten them that I'm going to expose them on BBC or something. Okay. By the way, I just want to show you that point about Swiss franc, sterling Swiss franc. So we had a sell signal there all the way back in September. Now we're out of this at the moment, okay? In October, we got out of it. So at the moment on the daily chart in sterling Swiss franc, we're neutral. And it's risen a bit. And you might say, oh, but you missed that. It doesn't matter. As long as you're making your money, it doesn't matter, okay? So we had that. Winners add to winners, so we would add to our winning position, okay? And that's the point. That Swiss franc tends to be a bit smoother. Australian dollar tends to be smoother. New Zealand dollar tends to be smoother because they're lesser known currencies. Now, when you're the global head of foreign exchange at Salomon Brothers, you might not be able to trade Australian dollar, New Zealand dollar at 3 in the morning because you'll be trading trillions of dollars. That's not a problem you're going to face today, is it? So use your smaller size. Use the fact that you're David, not Goliath, is the analogy I give always. Use that and don't be worried about using that. Okay, my friends? Don't be worried about using that fact that you are David, not Goliath. Use that smaller size to your advantage against the bigger players. Okay, any other questions? I want to make sure I've answered everything. If I've missed a question, just reiterate it to me, put it at the top. Let me make sure. Can you get the mentoring without the indicator, as asked David? Okay, well, actually, the mentoring and the indicator all come as one package for the moment. In future, it's going to be £2,000 a year for the mentoring, £2,000 a year for the indicator, but for the moment, it's all one package. All right, Kevin, Peter, yours went through. Don't worry, you are through on the mentoring, and I'm very excited for you too. Susan, Louise, congratulations. You always do trades on my webinar when you look at them on the screen. Congratulations, Louise. You made a bit of money on that yen trade. I'm glad that you did. Glad you're happy as well. I love it when you're happy, Louise. You know that as well. Let me see, what other questions have I got to make sure I've answered absolutely everything. Robert, the updates are free for life. Don't worry about that. I'm also going to give you a personal invitation to any trading seminar I run. And also, sometimes I give speeches, not necessarily about trading, but about financial technology, usually in Parliament, because, again, something people don't know on the technology stuff. And it's why I was in India with the PM. I do a lot of stuff on technology because my technology is, my reputation as being heard is Leon, don't do binary options. I'm going to come to that in 1 second. Okay, Ian, I'll answer your question on spreads. Tony, Saxo, I don't have a problem with. I don't really have a problem with Saxo. I know Lars Christensen, the CEO. You know, when you write in the FT, you get to meet anybody and everybody you want. I don't have a problem actually with Saxo, so you're okay there. I've had a lot of negative news recently about IG index, I'm afraid. I've got no grudge against IG. They used to use me for seminars to bring in customers and stuff, but I'm afraid recently, I'm only telling you what I've been hearing from people. They're not happy with how IG moved prices against them. Let me show you again with the lesser known currencies. Okay, we're picking up trends even on lesser known currencies. Okay, just so you know. So it's sometimes the lesser known stuff. Now people go, oh, aren't there wider spreads? I think Ian, you asked that on those. It is more than offset by the size of the gains. You got to measure the spread against the size of the gain you're looking to get. Okay, and you're absolutely right, Ian. Always look at the spread to make sure the broker isn't ripping you off, my friend. Okay, so always be careful about that. On that, what have we got? Binary options. I'll tell you why binary options are a rip-off. Okay. There's a couple of reasons, and people don't know. This is extended now, this webinar, longer than I anticipated, why binary options are a ripoff. And I'm just going to keep an eye on some of these trades as well that we've got going on, because I'm getting a bit worried. Some of them, just give me a second. People, I just got a signal to my assistant that she is keeping an eye on it for me while I talk to you. What happened with binary options is this. People realize that, wait a minute, if we make the equivalent of a one-arm bandit for trading, surely more people will gamble because it's just simple, up or down. Looks simple. And we'll embed in there the odds such that it looks like they're bound to win, but they never do. Surely if they would just make it 50-50, is it going to be higher or lower? What they do is they move the prices against you so that their algorithm is which side should we pick such that we don't have to pay the money out. It gets worse. binary options traders don't treat all accounts the same. So what they'll do is they'll divide it into sublots and say that 10%, we're going to say that long trades won, and that 10%, we're going to say that long trades lost. So either way, we'll keep making money. But it's even worse than that. Binary options brokers, a lot of them, 90% of them, maybe even more, are actually cons. What they do is they won't even give you your money back. They'll offer you special offers, and they'll say, oh, extra £10,000 bonus if you trade your nuts off and lose all your initial money, we'll give you an extra £10,000. But they'll never let you withdraw that 10,000. It goes into your trading account. So what's the point? It's like free chips in a freaking casino, right? They just use the casino model. But it gets worse. Let's say you make some profits. Unlike a casino, they won't let you take the money out. They won't ever let you take the money out. They'll ask you to deposit more before they let you take the money out. They'll say, oh, you got £10,000 in profits. Congratulations. Deposit another 10,000. We'll let you take your original 10,000 out. Huh? Okay, they'll do all of that. So that's the problem. I'm going to send you the links for ETX. Amar, I use them. I know the CEO. I only trust brokers whose CEOs I've met, whose offices I've been to, who are listed on the stock market and are regulated in the UK, Germany, the US, major markets. Never Cyprus. If it's Cyprus. Okay, at the moment I'm trying to convince Simon Gompertz and Adam Shaw from the BBC to do an expose on binary options brokers. We want to turn up, ideally I want to turn up in Cyprus and the offices of these brokers, especially when they ask you to wire money to Bulgaria, and say, right, give us the money, you bastards, because you're ripping off OAPs and the like. By the way, I'm just looking at some of the trades we've got going on because I just want to make sure things are going rather good actually at the moment. I think it's just a quiet moment in the evening. It's actually usually a really nice time to trade at night. Oh, Norwegian krona is another one which can have some of the most beautiful trades. Let me just go back onto the screen because you don't want to look at my face all the time, do you? Because also I want to just show you something on the Norwegian krona that we had earlier in the day. Now, this isn't one of my trades. It's one of the ones which one of my assistant traders put on earlier on, and he's giving me a post-it because he said, basically the point he's making is this. Euro Norwegian krona, like I said, 5-minute bars are not my most famous. Again, Norwegian krona is a minor currency, but look at how you get the trend picked up. All 3 hours are pointing down. We're still short on this, okay? Well, this is not my trade. This is my assistant, okay? One of my assistants. So it's one of his. That was a break even. Fine. So what? Some are break even. Some are break even. Let me tell you good news about any strategy. Any strategy should have something about it, which is this. Okay, any good trading strategy. Any losses should be small in size, short in duration. Small in size, short in duration. Also, any good strategy should give you ample window of opportunity to get in. In other words, that arrow comes up. Let's say you missed it by a few bars. Fine, you missed it by a few bars. The move should be, big enough that you've still got ample profit to capture. Okay, that's a good strategy. Because if I said to my investors, oh, I've got to be watching the screen every second, otherwise, Bernadette, congratulations, you're in as well. I'm glad you're excited. I'm glad you like the Get Rich Slowly bit. Because if I said to my investors, the pension funds and so on, oh, we've got to be watching the screen every second of the day, they'll just say, give us our money back. So nobody's going to watch the screen every second. There's got to be a window of opportunity. It's far easier to run a fund or run a business if you say you don't have to be in front of the screen all the time. You're able to have a window of opportunity rather than, oh, you've got to be there every microsecond there. I've got a question here from Kuljit. Alpesh, I respect the fact you're a global expert on trading. I'm just a beginner. Can I really use your indicator if I've got very little experience and trading knowledge? Kuljit, very good question. The fact is, I designed the pipspredator to be beginner friendly. So if you've never made a single trade on the market, you'll find the indicator very easy to use. And for those who've placed a ton of trades, the method's perfect for you to make your profitability more efficient, increase your trading knowledge, your experience, your skill. See, the whole idea with it is, it's a bit like training wheels for beginners and go faster stripes. I keep using the driving and the cycling analogy for the more advanced people as well. Congratulations to everybody who's taken action. I'm going to have to stop soon because I want to go to my apprentices. I want to send you all an email. All apprentices, you should have already downloaded the indicator. It takes 10 minutes to download and install. If it takes you any longer, just message me and I'll make sure it's installed for you. You're going to get daily mentoring emails, daily trade emails as well. You're part of my trading club, so I'll tell you what I'm looking to trade every day. You don't have to look at it every day. You can dip in and out. Okay, you should easily be able to recoup the cost of the indicator within those 30 days in any event. So the idea is I want to create an army of ambassadors because that increases the valuation of the company that I can offer it to venture capitalists. As simple as that. And yes, you've got access to me personally for life. It's a lifetime mentoring indeed. Last call for any questions. Yes, I do the mentoring. Praveen, Saturday webinars only for apprentices, I'm afraid, Jonathan, not open to the public, only for apprentices on that. When am I going to be raising prices, asks Marcus. I don't know. It could be the next webinar. I don't know when I'm doing the next one. Could be the next one. Could be whenever. But yeah, the idea is, because obviously if you're going to get outside investors in venture capital, they want to see more revenue streams. So they want to see £2,000 a year. Not for you. It won't affect you guys. Talk about in the future. £2,000 a year, mentoring £2,000 a year for the indicator as well. Okay. No monthly costs, no hidden costs, no upsells. Absolutely clear on that. I will email you, all of you, everybody, not just the apprentices, the brokers that I trust and like, how to download the data, the real-time data, the real-time prices, and all of that. That's the indicator license you're paying for. It's the lifetime mentoring and support if you wanted it. The support you're paying for in a one-off fee, absolutely one-off. And I want to create an army of fans. Ian, brilliant question. Do the signals have an email alert that tells you what to look for on the charts? Ian, they do, but I don't want you to use the email alerts, and I'll tell you why. I want you only to spend 15 minutes in front of the screen before and after work scanning 12 windows. So why do you need an email alert? The reason I said I don't want you to use the email alert or the pop-up on your smartphone, it can even give you a pop-up on your smartphone, is this: you're going to end up over trading. You're going to stare at your phone all day like people do on social media and Facebook and Twitter. Basically, I want to make you an efficient trader. But if you want the alert part, it is available, my friend. It is available. I'm just going to teach you the whole aspect, every aspect of trading. Do you see what I mean? Every aspect of trading to make you the best possible trader. And that means that I don't want you necessarily staring at the screen all day long. So hopefully you see where I'm coming from, but I'll explain more of that to you if you sign up in as an apprentice. I'll explain more of that. Now, guys, I'm going to have to go because, like I said, I've got a whole load of people that I want to, apprentices that, oh, Jonathan, you've just come in. Congratulations to you. You are through the door, as it were, at the last minute. So there's a whole load of you that I want apprentices to bring on board and get you to profitability, and even you can start downloading and start trading today, okay, this evening. So I want to thank everybody. If there's any last minute questions, like I said, I'll stay here all night long to make sure everybody's happy, because that's the attitude I have with my apprentices. It's the attitude I have with anybody who gives of their time to me. So let me know, my friends, if there's any other questions you've got. Thank you very much indeed. Thank you, Ian. Thank you all very much indeed. For the iPhone, John, which app? The same brokers. I'm going to email you the brokers. They all have apps for the iPhone and for the Android. I actually use an Android phone. I used to use iPhone. I use an Android phone. It just so happens. And it's the broker app. So I'm going to email you the books, the 2 ebooks to all of you, not just the apprentices and the brokers as well. Anything that I've missed, let me know. Otherwise, I'm going to say thank you, apprentices. I'm excited as well. I'm going to see you in a second, apprentices. On the other side, I think there's only a couple left anyway, so I'm going to leave it at that. Thank you all so very much. What I will say is I'll leave you with an image of me. Thank you all very much. I want to get people to profitability because I think we've got the next Google on our hands. Why not have big ambitions like that? And the way I'm doing it is building it up slowly, 25 apprentices at a time, to prove the concept to venture capitalists. And once we've got these profitable apprentices, say to the VCs, for every profitable apprentice, remember the valuation of a company goes up. They say, I want to raise the capital and eventually IPO the thing. So just so you know, those are my ambitions, and that's it. Dennis, you can use it for those, except I recommend it for FX. And I'll tell you why I recommend it for Forex. For this reason. Why do you care where you make money? Okay, why do you care whether you make money in gold, oil, indices, ETXs, stocks, or Forex? The Forex market's open 24 hours a day, 6 days a week. That's why I pick it. So as long as you're making the money, you shouldn't really care where and how you're making it. Do you see what I mean? There's too much reliance on comfort factors. That's been the problem up till now with people trading, and why they don't make money is they stick to some of the comfort factors. Although I understand why they do it, so that's not a problem. But what I'm saying is do it this way instead. All right, everyone. Thank you all so very much.